Hello and welcome to this wonderful chapter, Dividend Policy. Today we are going to revise Dividend Policy chapter, a very easy chapter, a small chapter. So please focus on the lecture till the end of this video and your entire dividend decision chapter will be revised in about 45 minutes to 1 hour, and that will give you about 5 to 8 marks in the exam. Okay, so this dividend decision chapter talks about the role of dividend in influencing the share price. So there are two types of theories. Which are these two types of theories? One is called irrelevance theory. Dividend theories are divided into two types: irrelevance theory and relevance theory. What do you mean by irrelevance theory? It means dividend policy does not influence the value of the firm. Dividend policy does not influence the value of the firm, and relevance theory believes that dividend policy influences the value of the firm. Dividend policy influences the value of the firm. And second point you can note down here, firm can increase the value of share. Firm can increase the value of share by selecting optimum dividend policy. By selecting optimum dividend policy. So that is called relevance theory. So which is the theory which promotes irrelevance of dividend? Modigliani and Miller approach, or in short M&M approach. M&M approach believes that dividend policy does not influence the value of the firm. By changing the dividend policy, the value of the firm will not change. Value of the firm will remain same. So in order to increase the value of the firm, you have to increase the earnings, not changing the dividend payout ratio, because that will not help you in increasing the value of the firm. And under relevance theory, we have Walter model, Gordon model, bird in hand theory, bird in hand, which is also given by Gordon only. So Gordon revised model and traditional approach. Traditional approach. Who has given traditional approach? Graham and Dodd. D-O-D-D. They are very popular economists. Now they have died, but Graham has written a book also, The Intelligent Investor, which is very popular book. Benjamin Graham, yes, you're right. So now we will see their formula and their prescription. So what you have to understand here, formula and prescription as to what should be dividend policy of a firm. So please note down if you are writing little fast. Highly recommended that you must write it down, because one day before the exam, if you want to revise, it will be very useful to you. Okay. So can we go to the theories now? Yes. The first theory was M&M approach. So M&M approach belongs to dividend irrelevance theory. Dividend does not matter. So they have given you three formulae, and with the help of these three formulae they come to the conclusion that dividend policy does not matter. First formula is P0 equal to B1 plus P1 upon 1 plus K, which means the price of the share today is the present value of the next year's dividend and next year price. From this formula we can derive next year price will be equal to P0 into 1 plus K to minus 0. So either of the two formulae can be used to find the missing figure. Second formula they have given you is number of new shares to be issued. Number of new shares to be issued, which we will call N1. Is it right? So N1 is equal to I stands for investment requirement, minus in bracket earnings minus ND1 divided by P1. Investment minus retained earning means fresh funds to be raised by issue of equity share divided by price of the share. So I stands for investment requirement, E stands for total earnings, N stands for number of existing shares at the beginning, and P1 already seen above, price at the end of the year. Four variables are there. So this is the formula for new number of shares to be issued, and the important formula is the third one, value of firm, which is written as NP0. So NP0 equal to N plus N1 into P1 minus in bracket I minus E upon 1 plus K. K means cost of equity. N1, P1, I and E I have already written in the second formula. So what is their suggestion? Suggestion is, first point, dividend policy does not matter. Dividend policy does not matter. That means by changing dividend policy, the value of the firm will come to the same. You can calculate. And second, we'll take one example after some time. And second, focus on earnings, not dividend. Focus on earning, not dividend. Okay. So this is my Modigliani-Miller approach. The second approach is called Walter approach. James Walter has given this theory. According to this, the price of the share is equal to D plus R by K into E minus D upon K. You can write K or K. What is D here? D here dividend per share, which can be 0 also. What is E here? Earning per share. In this formula, E stands for earnings per share. In the previous Modigliani-Miller, E stands for total earning. R is return on equity, return on investment, and K is the cost of equity or capitalization rate. Sometime in the problem they will say capitalization rate. Is it right? Why are you not saying yes? Yes. So four variables affect the price of the share today. This is called Volter approach. In the exam they can ask you find dividend. So you have to write the equation, find out the missing figure, whatever may be the missing figure. And what is the suggestion given by recommendation of Volter model? So recommendation of Volter model depends on what is the relationship between R and K. Okay. So if R is greater than K, then what is the type of firm? Growth firm. Then it is called growth firm. Growth firm. And what is the dividend payout suggested by Volter model? 0%. Don't pay dividend. Okay. Or if 0 is not possible, low payout should be given. If R is equal to K, it is called stable firm. Dividend payout will be anything between 0 to 100%. And if R is less than K, it is a declining firm. It is a declining firm. 100% payout. So if you follow this prescription given by Volter, the value of the share can be maximized. Is it right? So growth firm should pay 0% because the firm can use the funds better than the investor. R is equal to K does not matter, and R is less than K, firm is inefficient. It is better to transfer 100% of the earnings to the shareholder. Okay. Now next we will see Gordon model. So Gordon model also belongs to relevance theory. Dividend is relevant. According to Gordon model, the price of the share is E into 1 minus B upon KE minus B into R. Okay, what is E here? Earnings per share. In the exam, after writing the formula, you will write the meaning of the terms used. B stands for retention ratio. Retention ratio is equal to 100 minus dividend payout ratio. 100 minus dividend payout ratio. If dividend payout ratio is 80%, retention is 20%. Then what is KE, cost of equity, that you know. What is R in this equation? Return on investment. Return on investment. And what is B into R known as G, that is growth rate. B into R is growth rate. What is 1 minus B known as? Is dividend payout ratio. What is E into 1 minus B known as? Dividend. Dividend is equal to earning into dividend payout ratio. Is it right? This is called Gordon model. Then write down suggestions. Suggestions. Write down in one line, same as Volter model. I am not repeating again. Same as Volter model. If the firm can earn more than the cost of capital, better that the firm retains the entire earning, 0% payout. Now we'll come to 4, write down bird in hand theory. revised Gordon model, and it is same like Gordon model only. The price of the share is equal to last year dividend into 1 plus G. G stands for growth rate upon K minus G, or if next year dividend is given, D1 is given, next year expected dividend is given, then directly D1 upon K minus G, subject to K should be greater than G. If K is less than G, then price will become negative. Then price will become negative. Do not write negative price. Do not write negative price in the answer. Write price is not determinable. Right? Price is not determinable. That is called bird in hand theory. Is it right? Gordon model and bird in hand theory are more or less same. Up to this you have noted. What is the suggestion? Right below suggestion. Same as Walter and Gordon model. Suggestion write down. Same as Walter and Gordon model. Same as Walter and Gordon model. Same as Walter and Gordon model. Then the fifth one write down. Traditional approach. Fifth one write down traditional approach. In bracket given by Graham and Dodd. So price of the share is equal to M into bracket D plus E by 3. M is equal to multiplier, number of times the market price is of D plus E. D stands for dividend per share. In the exam, when you write the formula, below the formula you will write this. E is equal to earnings per share. In the exam, they can give you 3 variable and you have to find the 4th one. Okay. What is the suggestion of this theory? Maximum dividend. So this says you give maximum dividend. Dividend influences share price more than the earnings. Dividend influences share price more than the earnings. Because you see in the formula, dividend is given a weightage of 1 and earning is given a weightage of 1 by 3. Is it right? That is called traditional approach. Then you write down Lintner model. Lintner model does not give you the price of the share, but Lintner model helps you to calculate the dividend to be paid in the current year. So according to Lintner model, Current year dividend depends on last year dividend, current year EPS, and the adjustment factor, and the long-term target payout ratio. Is it right? So the formula is current year dividend is equal to previous year dividend plus in big bracket, inside the big bracket, small bracket, EPS into target payout minus D0 and then multiplied by AF. So what is B1 here? Current year's dividend. That is what the student has to calculate. How much dividend should be paid in current year as per Lintner model. It depends on how much dividend was paid in the last year. So D0 is last year's dividend. D0 is last year's dividend. EPS is earning per share. Or you can just ignore it. Target payout ratio means dividend payout ratio. Target payout is long-term dividend payout ratio. And AF means adjustment factor or speed of adjustment. This is used by the company to reduce the speed of dividend. They don't want to pay higher dividend in the current year if earnings have gone up, because it will create unnecessary expectation in the minds of the shareholder. Okay. Now write down dividend discount model. Under that write down A, zero growth model. That means dividend will remain constant, bracket constant dividend. In bracket write constant dividend. The formula is P0 equal to D upon K. Then second write down dividend growing at a constant rate. Dividend growing at a constant rate. So P0 equal to D1 upon K minus G, same as Gordon model, same as bird in hand theory. Don't worry, because most formula which uses dividend have the same formula. So write down nicely. Is it right? You can write nicely. It will help you before the exam. So can we go to the next discussion? Say yes. Why don't you say yes? So this is dividend discount model, zero growth model, growing at a constant rate, and C write down multi-stage growth model. Multi-stage growth model or variable rate growth model. So here more than one growth rate may be given. Is it right? So here calculate present value of all future dividend. Calculate present value of all future dividend. I will solve one question of each variety so that you will understand each model with the help of one example also. So continue to pay attention. And the last part of this chapter was stock split. Stock split means shares of higher face value are converted into shares of lower face value. So what is the benefit of stock split? Benefit is more number of shares are available for trading. More number of shares are available for trading. More small investors can participate in trading. More liquidity. More liquidity. Shares become affordable. Shares become affordable because the price gets reduced. Because this is a theory question in the exam. Benefit of stock split. Okay. Have you done? Say yes. Write down below some related formulae. Some related formulae. One related formula, write down dividend payout. If you are interested in writing, keep writing. Otherwise, enjoy the show. DPS upon EPS or total dividend upon total earnings. So you can be required to use this formula to find out the dividend payout ratio. From the dividend payout ratio, you can calculate retention ratio, 100 minus dividend payout ratio. Then write down return on investment. Related formula number 2. Keep writing. You will be required to use this in the current chapter. Is earning available to equity shareholder divided by net worth. Net worth, that is share capital plus reserve. Note, if reserves are not given, use share capital only. In some exam question, they have not given reserve. Use share capital. Okay. Then another question is EPS. PAT minus preference dividend divided by number of, because EPS is required in many formulae. EPS will be required in Walter model, Gordon model, Graham and Dodd model, and they may not give you EPS. So PAT minus preference dividend divided by number of equity shares. PE ratio is market price upon earning per share. Is it right? Cost of equity, one formula is reciprocal of P ratio, which means P ratio is 1 upon K. One more formula. K is equal to, one more formula, D1 upon P0 plus G. Depending upon the availability of data, if K is not given, but P ratio is given sometimes. Take reciprocal of P ratio, or if you can calculate using this formula, then you can compute the cost of equity using the second formula also. Is it right? Say yes. So now we are ready to launch some important questions of dividend decisions. Questions are printed in our class notes. If you have the class notes, you can understand better. The source of the question number 16 is study material and MTP of August 18. Are you ready? Question number 16. M Limited belongs to a risk class for which the capitalization rate is 10%. It has outstanding share and the current market price is rupees 100. It expects a net profit of rupees 2,50,000 for the year, and the board is considering a dividend of rupees 5 per share. M Limited requires to raise 5 lakh for an approved investment expenditure. Illustrate how MM approach affects the value of the M Limited if dividends are paid or not paid. So this is a revision of M&M approach when dividend is paid and when dividends are not paid. So we'll see the application of the theory in this example. Are you ready? Open the notebook, write along with me. Heading, write down calculation of value of the firm under M&M approach. Calculation of value of the firm under M&M approach. So M&M approach says the value of the firm will remain constant irrespective of the dividend payout. And they have given you 3 formula to prove their point. So we will find in the answer ultimately the 2 columns will give you the same answer. Whether dividend is paid or whether dividends are not paid. Please write down serial number. Particulars. When dividend is declared, when dividend is not declared. Keep around 2.5 inch blank in the column because some calculations are lengthy. If you can keep more space, you can write easily, nicely. Institute can also understand. And it will save time. You will not have to write the same formula 2 times. First, one by one we will solve. Point number A. First, what we should do, we should calculate the market price of the share at the end of the year using M&M approach, because that will be required in the second step where you have to calculate the number of share to be issued. Ready? Okay, start. First, write down. Students are very active. Market price at the end of the year. P1 is equal to P0 into 1 plus K minus D1. Question should be in front of you. P1 is equal to, what is the current share price given in the problem? Can you see 100 rupees in the second line? And what is the cost of equity or capitalization rate? 10% in the first line, 0.10. When dividend is declared, then how much dividend they want to pay? 5 minus 5. Student will give me the answer 105. Go to next column. P1 is equal to 100 into 1.10, but this time dividend is 0. So the answer would be 110. Simple mathematics. Okay. Now write down point B. Number of share to be issued at the end of the year N1. N1 is equal to I into bracket I into I minus E minus ND1 upon P1 upon P1. So how to solve this? I means how much investment do they require? So they require 5 lakh rupees. So N1 is equal to 5 lakh is your investment target. In bracket earning is 2 lakh 50,000. And out of 2 lakh 50,000, how much dividend will be paid? So number of outstanding share, write down 50,000, 25,000 write down. Number of outstanding share 25,000. Here it has 25,000 shares. It's typing mistake in the book. It has 25,000 outstanding shares. Okay, make it 25,000. And dividend is how much? 5. So what you have written in the bracket is basically retained earning. Investment minus retained earning is fresh issue of equity share divided by 105. You can write in fraction also. 357 1.4285. Are you getting somewhere close to this? Very good. Next column. N1 is equal to 5 lakh minus 2 lakh 50,000, but dividend is not paid, so 0. Divide by price 110. Calculate. 2272.7272. 7272 shares, number of shares, which I will require now in the third answer. Now the learned student, intelligent students will write point C value of the firm. Practice in writing. Keep the notebook with you. Formula is N plus N1 in bracket into P1 minus in bracket I minus E upon 1 plus K. Write the formula. Written. Then how do you solve it? N is 25,000 share plus 3571.4285 into 105 minus in bracket 5 lakh minus earnings 2 lakh 50,000. Please solve. Divide by 1 plus 0.10. Final answer only. It's 25 lakh rupees. Is it 25 lakh? And what we have to prove? That the answer will be same even if dividend is not declared. So write down 25,000 plus 2272.7272 into 110 minus 5 lakh minus 2 lakh 50,000 divide by 1.10. So that is also rupees 25 lakh. That is also 25 lakh. So what is the note you will write here? What is the note? Value of the firm. Value of the firm remains same irrespective of dividend policy. So if you pay dividend of 5, then also 25 lakh. If you don't pay dividend, then also 25 lakh. So this is the typical question of Modigliani-Miller approach. So whatever they will ask in the exam, accordingly you will frame the answer. They may only ask you first and second step, number of share to be issued. Then stop there. You can issue shares in fraction as per Modigliani-Miller approach because it assumes that capital markets are perfect. Securities can be bought and sold in fractions also. So when you write in fraction, it becomes easier for you to prove your point that your value will remain the same. So that was question number 16 for you. Now we'll go to question number 12. So this will give you a practice of Walter model. Question is there in the study material and was asked in November 19 RTP. The following information pertains to Messrs. XY Limited. Earning of the company is 5 lakh. Dividend payout is 60%. Number of share outstanding is 1 lakh. Equity capitalization rate 12%, that is KE. Return on investment R is 15%. Compute the market value as per Walter model. Then optimum dividend payout ratio according to Walter model. So kindly answer, if your R is greater than K, what will be the optimum dividend payout ratio? Please reply. 0%. Firm is using the funds better than the investor. It is a growth firm. And then you have to recalculate the market price of the share at 0% payout ratio. Say yes. So we'll write down. First we'll make step 1. Calculation of EPS and DPS, earning per share and dividend per share. So first point A is total earnings. Anybody total earning? 5 lakh. Point B, number of shares. Anybody number of shares? 1 lakh is right. Point C, earning per share A divided by B. A divided by B rupees 5. And point D, dividend payout ratio. Dividend payout ratio 60%. Write everything because institute will not give you marks if you write directly. I also know it is 3 rupees. 5 into 60%, 3. This is the height of presentation. Nobody will dare to deduct marks. Okay. So this is your earning and dividend, E and D of the Walter formula. Now write down step 2. The first question is, what is the market value per share as per Walter model? Market value per share as per the question, as per Walter model, in bracket based on current dividend policy, based on present dividend policy, what market price they will get. So the formula is price equal to, as per Walter model, D plus R by K into E minus D upon K. With lot of practice you will remember the formula. On the left side of the screen, dividend is 3 rupees. R is given 15%, 0.15. Cost of equity is given 12%, 0.12. Earning per share 5, dividend is 3, divide by 0.12. Good students will reply now. This is how you get good marks if you do lot of practice. Rupees 45.83, this is enough. Rupees 45.83. Answer is not over. Second question is, what is the optimum dividend payout ratio and what is the market value at that payout ratio? So for that I have to first write a note here. Note. Return on investment in bracket R, that is 15%, is greater than equity capitalization rate. So this will revise Walter model, that in bracket K, and that is 12%, correct? This way you write, don't leave anything. Such firms are known as, what they are known as, growth or declining? Growth firms. As per Walter model. Such firms are known as growth firm as per Walter model. The optimum dividend payout ratio for growth firms comma, to maximize the market value of the share is 0%. So this is the comment you have to write. 2 marks for this much also. And then write down price when payout is 0 is equal to, formula I have already written, so I can directly write now, because in same question there is no need to write formula twice. 0 plus 0.15 divide by 0.12 into bracket 5 minus 0 divide by 0.12, final answer. So 52.08 is enough. Write down nicely. So what is your observation here? When a growth firm was paying 60% payout, its market value was 45.83. But when it revised its dividend policy to 0%, as per the suggestion given by Walter, the market prices increased. Note, the market value of share, increases when payout ratio is 0%. The market value of the share increases when the payout ratio is 0%. So this is an example on Walter model. Have you noted down? Good student, will come to question number 18 now. One more question where we are going to practice Gordon and Walter model. Okay. With the help of following figures. Which figure? Mathematical figures, not human figures. Okay. Calculate the market value of a share of a company by using Walter formula, dividend growth model, Gordon's formula. So this will revise two formulae, and this question is an exam question also. May 2019 exam for 5 marks. So the data is dividend per share, earning per share, cost of equity, IRR, and retention ratio. So when you are applying Walter model, use the formula of Walter, and when you are applying Gordon model, use Gordon formula. Is it right? Right. Directly we'll write the formula first because the data, they are easily available in the question. Internal rate of return on investment is called R, and retention ratio is called B. Okay. First write down step 1. Market value of share. Market value of share using Walter model. Using Walter model. Exam question for 5 marks. It is a bonus mark. So here the answer is equal to, first time when you are solving, write the formula d plus r by k into bracket e minus d upon k. Then put the numbers given in the question. How much dividend is given? How much return on investment is given? 0.25. Cost of equity 0.20. Earning per share 10. Dividend divide by, yes, student will solve the question and now write the final answer. Rupees 55. Very easy. 2.5 marks. Then write down step 2. Market value of share using Gordon model. So here the price of the share is equal to E into 1 minus B K minus B into R. What is E here? E is 10. In your question, retention ratio was given in the last line of the table, 0.4. This is Gordon formula, dividend growth model. Now what is K here? 0.20. And what is retention ratio? 0.4. Return on investment is 0.25. So now you'll get the price if you solve properly. Is it rupees 60? Question number 18 is over. Question was asked in study material November 2020 RTP, March 2019 MTP for 5 marks, and March 19 MTP also 5 marks, and finally in the exam May 19 for 5 marks. So this way we have practiced Gordon model also. Now we'll practice one multi-stage growth model. Is it right? So heading write down in your book, multi-stage growth model. More than one growth rate is given. A&R Limited is a large cap multinational company. Doesn't matter. Listed in BSE in India. Again doesn't matter. With a face value of rupees 100. This might be required. The company is expected to grow at the rate of 15% per annum for the next 4 years. Then 5% for an indefinite period. Okay. For year 0, 1, 2, 3, 4, the growth rate will be 15%, and then the growth rate will fall, stabilize at 5% from 5th year onwards. Is it right? Till infinity, it will remain 5%. So this is called two-stage growth model. First 4 years growth rate is very high. Now the question says the shareholders expect a 20% return on their investment. That is your discount rate. Company paid rupees 120 as dividend per share for 2021. This is the dividend paid in the last year. Paid word underline, already paid. But we have to take dividend that will be paid in future period. Okay. The share price of the company traded at an average price of rupees 3122 on the last day. So the price of the share given is 3122. You have to check whether it is undervalued or overvalued. We will do our calculation. Find the intrinsic value per share and also state whether shares are overpriced or underpriced. So what is the meaning of intrinsic value? It means present value of all future cash flow. Is it right? So write intrinsic value means present value of all future cash flows generated by the share. Next line, write down calculation of intrinsic value. We will prepare in a tabular format. Easy to understand. First column year. Second column little bigger column cash flow. Third column present value factor at the rate 20%. Last column present value. You can solve by equation format also. This is easier for understanding purpose. I hope you have drawn the format. Done. So first you write down here year 1, 2, 3, 4, 5 to infinity. It is also called terminal value. What it is called? Terminal value. That means value at the end of 4th year. Terminal value means value at the end of 4th, because first 4 year I will get the dividend. From 5th year onwards I will get dividend which will continue to grow at the rate of 5% forever. So what is the dividend you will write in year 1? Last year dividend paid was. Come on, fill in the blanks. Last year dividend paid was 120. But first 4 year the growth rate in dividend is 15% per annum. First 4 years. So you will write here 120 into 1.15 to the power 1, or just into 1.15. So how much you are getting? In 2 digits. 138. Sure. Then your 138 will be into 1.15. That will grow at the rate of 15%. So learned student, please reply. 158.70. Okay. Then 158.70 will grow at the rate of 15% in the next year. 1 182.505. Sure. And then take 182.505 into 1.15. So this will be the dividend of the fourth year. 209.88. Now wait and stop. Wait, answer is not over. The main critical part is this one. Many students send me email also or ask the doubt on phone also. What is this last one which we have not understood? Is it right? So first you focus on understanding, then you can write anytime you want. This is year 1, 2, 3, 4. Okay. But then what will happen after that first 4 year, which is a period of super normal growth, your dividend will stabilize from 5th year onwards. And from 5th year till the infinity, the growth rate will be how much? 5%? 5%. We have done the calculation up to 4 years. First 4 year we have written individual years. But from 5 I can't write 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It will go forever. So I will have to apply the formula of dividend growth model. What is the formula? D1 upon K minus G. The formula D1 upon K minus G you will use when you have to calculate the price in year 0. But I have to calculate the price at this point. Because suppose I forget this 4 years are let's say over. 4 years are over. Forget 4 years. Now if I have to calculate the value after 4 years are over, the price of the share will be present value of the future cash flow from year 5 till infinity. Say yes. Which means the price at this point, let us call it P4, will be equal to D5 upon K minus G. Is it right? If P0 is equal to D1 upon K minus G, then price at the end of 4th year will be dividend of the 5th year upon K minus G. And what is the dividend of the 5th year? What is the dividend of the 5th year? So dividend of the 4th year is 209.88. But that will grow at what rate? 5%. That will grow at the rate of 5%. And that will be divided by 20%. K. Is the K 20%? Yes. Minus 5%. 0.15. So give me the final answer. 1469.401. 4016. One second. 1469.16. Okay. Wait. See, this is the difficult part. Very few students of intermediate are able to understand what they have done. Is it right? You are standing here. Suppose you are standing here. You are a human being with 2 ears, 2 legs, 2 hands. Okay. And now you want to know what will be the price at this point. The price at this point will be present value of future dividend, which is starting from year 5 and going till infinity. Say yes. So we'll apply the same formula which you apply for any growing dividend. Is it right? So I hope you have drawn this diagram. If not, draw it now. and with the numbers also. This you write working note 1, calculation of price at the end of fourth year. After 4 years, the share price will be how much? After 4 years, the price of the share will be present value of future dividend. At any point of time, the formula will be same. The price at this point is present value of future dividend. So at the year 4, the future dividend are dividend of 5th year, 6th year and infinity. And that is a growing perpetuity. That is growing at the rate of 5%. So I am going to apply the formula of a growing annuity, mathematical formula taught in your mathematics classes. Why are you staring at me with all anger? Done? See, I can't wait. Write fast. In the exam, you don't have to draw this, okay? You have to draw this much. So 1469.16 is the answer of P4. What is P4? P4 means price of the share at the end of the fourth year. P4. Now what I'll do with this number? I'll bring it to my main table. This is a working note, terminal value. In bracket write terminal value if you want to write. Whichever way you understand. But if you can't understand this 5 marks will be lost. So write here, how much was that figure? 1469.16. This is P4. This is not dividend. This is the price of the share at the end of the fourth year. Understood? Now take your calculator. 1 divided by 1.20 equal to 0.8333. Again equal to 0.6944. Again equal to 0.5787. Again equal to 0.4823. Wait, stop. What is the factor you will write for the, will you write for the 5th year or will you write for the 4th year? Quickly answer. Think and answer. God has given you a thinking chamber called brain. Then why are you shooting without think? Don't shoot. Think and shoot. This cash flow will be received when? After half an hour of explanation. When will you get that 1469? At which point of time? Purposefully I had written the heading at the end of fourth year. Purposefully I have drawn the diagram. Purposefully P4. So this cash flow will be received by us at the end of fourth year. Then why you said 5th year discounting factor? We will use fourth year because this is not dividend. This is price at the end of fourth year, which is the present value of dividend from 5th to infinity. Oh my God. 99% students in the exam are not able to solve this question. First of all, their teachers don't understand what is to be done. Okay. And if they don't understand themselves, they say leave it. Just 5 marks. How does it make a difference? The 5 marks can change your 6 months, your rank, your set off, your articleship in a big firm. Okay. Your career only. Now my job is over. What the learned student will do, you multiply these two, write in last column, use memory plus function also. Who will reply? First year. 1 in 2 digits only, let us not waste time. 9 5. Memory plus. in 2 digits. 110.20 memory plus 105.62 memory plus 101.22 memory plus 708.51, 2 digits. We are writing price, we are not writing a atom bomb formula. So what is the total? 1140.57. This is the intrinsic value of the share. Intrinsic value means this is the price the investor is willing to pay, which will give him a 20% return. Is it right? If he buys the share at this price, he will earn a return of 20%. And what is the market price of the share? 3122. Oh my God, unbelievable. The market price of this share is 3122, but you are willing to pay only 1140.57. Is it overvalued or undervalued? Overvalued. So write a note or advice. The current market price is rupees 3122, which is higher than the intrinsic value of rupees 1140.57. Thus, it is overvalued by. Now take on your calculator difference between 3140 and 1140.57. Haji? 1971.43. Sure, na? Life of many people are at stake. I am getting a different answer. Just let me try again. Okay, ठीक है. So this is the 1971.43. Hence it should not be bought. 1981. 1981.43. Hence it should not be bought. Hence it should not be bought. Hence it should not be bought. Okay. This is called multi-stage growth model. They have asked in the exam also in the past. Write down, it is a past exam question. Past exam question. Many times they have asked, not just once or twice. Is it right? So we have completed the revision of all the important sums. Is it right? Hope you liked it. Thank you very much. Kindly revise again and again. All questions revise. This will make you stronger in this chapter. Okay. Mostly they will ask you Modigliani and Miller, Walter model, Gordon model, and this multi-stage growth model problem in the exam. Thank you very much. Okay, today we'll take the revision of your important topic, working capital management. So first I will give you a brief summary of this chapter and then we'll take some important questions. Okay, so write down working capital management. The focus is your exam because this is a revision discussion now. We have already learnt in detail So first we'll write down the meaning of working capital. Working capital is current assets minus current liabilities. So what is gross working capital? Gross working capital, if they ask you, then you will write current assets only. And this current asset minus current liability is called net working capital. If you want to add this word net here, you can add. Is it right? So these are basic things. Then in this chapter, we are required to calculate operating cycle. We are required to calculate operating cycle. So under that I will write 2 points. One, gross operating cycle. Operating cycle means time required to convert cash into raw material into WIP into finished goods into debtor, and debtors again into cash. So gross operating cycle is equal to raw material holding period plus WIP holding period plus finished goods storage period. Finished goods storage period. This is like a quick summary of this chapter, plus debtor collection period. Anything extra you want to note down for yourself, you can do it. Debtors collection period. Okay. And then you write down second point, net operating cycle. Net operating cycle will be equal to gross operating cycle minus, what is minus? Creditors payment period minus creditors. Keep writing also. It will be helpful a day before the exam to revise. Okay. Then fourth, you write down point number 4, how to calculate raw material storage period. How to calculate raw material storage period. So there are two formulae I will give you. Depending on the information in the problem, you can apply that. First formula is average stock of raw material divided by average raw material. RM means raw material, not Rani Mukherjee. Okay. Average raw material consumption per day. Otherwise, some student will think I am teaching something different. So average raw material consumption per day. So this is your average stock of raw material. This is the stock you hold. Divided by how much you consume per day will give you on an average how many days the raw material remains in your stock before it is sent for production. The other formula is 365 divided by raw material turnover ratio. 365 divided by raw material turnover ratio will also give the answer in raw material storage period in days. When you are dividing by 365, you will get answer in days. If the institute specifically mentions 360 days in the problem, then take 360 days. Up to this you have noted. Now I will go to fifth formula is WIP holding period. WIP holding period is equal to same logic, for how many days the stock remains in WIP stage. Okay. So average stock of WIP upon average cost of production per day. average cost of production per day, or 365 days or 360 days divided by WIP turnover ratio, if turnover ratio is given. Sixth formula, write down for finished goods storage period. Finished goods storage period. Here also I will give you two formula. One is average stock of finished goods. Keep writing also. When you write yourself, you will learn more. This is a summary you have to prepare yourself. You can add few more points if you want on your own. Is it right? So that one day before the exam, when you have only limited time available to revise such vast syllabus, you can do it. So average stock of finished goods divided by what? Divided by, come on, average cost of goods sold per day. Goods sold per day. Same logic, or you can write 365 days or 360 days depending upon the question. If you have to compute in days, if they ask in months, 12 months divided by you will write, okay, or 12 months divided by what? Yes, finished goods turnover ratio or stock turnover ratio or inventory turnover ratio. Stock turnover ratio, inventory turnover ratio. Seventh formula, write down debtors collection period. For how many days you collect your receivables. So write down average accounts receivable. Average accounts receivable. Receivable means debtor and bills receivable both. Receivables means debtor plus bills receivable divided by average credit sales per day. Average credit sales per day, or you can write 365 days or 360 days or 12 months. If you want the answer in months, divide by what? Divide by debtors turnover ratio, depending upon how the information is given. If suppose it says debtors turnover ratio is 5, find out debtors collection period. Then you have no choice but to use the second formula. Is it right? Now here what care you will take, in the numerator you will take debtor and bills receivable both, and the denominator should have credit sale. Underline or highlight if you have a highlighter. Do not take cash sale. Do not take cash sales. Point number 8, write down creditors payment period. All this will be required for calculating operating cycle. Okay. Each of the element you have to first compute, then you will get the operating cycle by adding these numbers. So write down average accounts payable. So average accounts payable means creditors plus bills payable. Creditor plus bills payable. So today before you sleep, just revise your book one more time and divide by what? Divide by average credit purchase. Underline credit purchase. If cash purchase is given, don't consider, per day, or 365 days or 360 days or 12 months. If you have to compute in months, divide by what? Creditors turnover ratio. So this gives you time required on an average to make payment to creditors. Is it right? And how do you get the average in all the above formula? Average will be equal to opening balance plus closing balance divided by 2. Opening balance plus closing balance divided by 2 for all these items. Okay. Then one more formula note down. Amount of working capital required. Amount of working capital required using operating cycle. Using operating cycle. So that is equal to annual operating cost divided by number of operating cycles. Annual operating cost divided by number of operating cycles. Or you can say, or operating cycle period divided by 365 days into annual operating cost. It means proportionate. Depending upon how the information is available or which formula you have understood better, more confidence, you can use it. Then your question will be how to calculate number of operating cycles. How to calculate number of operating cycles? Yes, anybody in good handwriting, write down number of operating cycle equal to 365 days or 360 days or 12 months, depending on how you have computed the operating cycle period, divided by operating cycle period. Is it right? Divided by operating cycle period. So that will give you number of operating cycles in a year. Highly tested in the exam, this question on net operating cycle. So there are 3 questions asked here. Calculate the operating cycle, calculate the number of operating cycle, and calculate the amount of working capital required using operating cycle. Is it right? So this was about operating cycle. Done. So point number 9, write down. Point number 9. Estimation of current assets. Good student will write nicely because he knows this will be very useful. Estimation of current asset. Under that, one by one, estimation of, now we are doing reverse working. From the raw material storage period, we will have to find out raw material stock. So raw material stock will be equal to, already seen in ratio analysis topic also, raw material holding period divided by either 365 days or 360 days or 12 months into what? I am asking the students who are present right now in the live class, into what? Into raw material consumption. Into raw material consumption. Into raw material consumption. Okay. So that means basically what you are doing, this is your annual consumption of raw material, say 12 lakh rupees, and raw material holding period is 1 month. So 1 by 12 into 12 lakh. So even if you don't remember the formula, you will be given annual figure. You have to compute the proportionate figure. Is it right? Haji. Then write down B. WIP inventory. WIP inventory will be equal to, now you can develop the formula yourself. WIP holding period divided by same. You will write 365 days or 12 months into cost of production, into cost of production, into cost of production. Is it right? Now write a note. If the question is silent, assume material is 100% complete and conversion costs are 50% complete in WIP. Conversion cost is 50% complete in WIP. Then point number C, write down finished goods stock. FG means finished goods. So you will write finished goods storage period divide by, again I will write 365 days or 12 months into cost of goods sold. Into cost of goods sold. Then write down D, debtors. So debtor will be debtors collection period. Please write down also. I am working in your interest. This will be very useful a day before exam. Divide by, if days are given, take 365 days. If months are given, take 12 months. Into, come on, into what? Not sales, credit sales. That is the point of mistake. Don't take total sale, take only credit sale. In bracket, do not take cash sales. Okay. Then write down next point 10, estimation of current liabilities. Point number 10, write down estimation of, I hope you are writing current liabilities. Estimation of current liabilities, usually 3 items are asked. A, creditors. Creditors for material will be equal to creditors payment period. Creditors payment period will be given to you, divide by 365 days or 12 months into credit purchases. Again in bracket, do not consider cash purchases. Do not consider cash purchases. They may try to trap you, but you are intelligent. Okay, so this is current liabilities. Point number B, write down wages payable. Wages payable will be time lag in wages payment. Time lag in wages payment divide by 365 days or 12 months into total wages, total wages for the year, total wages for the year. And one more formula write down, overheads payable. Overheads payable will be same formula, time lag in overheads payment divide by 365 days if days are given, or 12 months if months are given, into total wages for the year. Total wages for the year. Sorry, total overheads for the year. Total overheads. Total cash overheads write down. Total cash overheads for the year. Depreciation is not a liability. Note, depreciation is not a liability. So you will not write in the current liability list depreciation payable. Depreciation is not a liability. Is it right? Point number 11 write down, approaches to calculation of working capital requirement. Approaches to calculation of working capital requirement. So there are two approaches. One is called total approach. Is it right? So under that total approach, we consider depreciation and profit. We consider depreciation, which is a non-cash item, and profit in estimation of WIP, finished goods and debtors. That is called total approach. So some companies may follow total approach. Is it right? Write one more sentence. Debtors will be based on credit sales. So don't worry, just take credit sale multiplied by average collection period into and divide by 365 days. So that is your total approach. Finished goods and WIP will include depreciation also. Finished goods and WIP will include depreciation also. Up to this you have written. Nowadays the institute is giving lot of focus on cash approach. Cash approach means, under that write down, WIP will exclude depreciation. Okay. Finished goods will exclude depreciation, and debtors will exclude depreciation and profit. That is, debtors is based on cash cost of sales. Debtor is based on cash cost of sales. Data is based on cash cost of sales. Note, if the problem is silent, follow any of the two approaches by writing the assumption. Follow any of the two approaches by writing the assumption. However, cash cost approach is preferred. Cash cost approach is preferred because it tells you exactly how much funds are required. It tells you exactly how much funds are required to finance your working capital. So given a time constraint in the exam, and if the problem is silent, one can follow either of the two approach, but cash approach is preferable. Is it right? But cash approach is preferred. Then you write down how many formula we have completed. 11. Point number 12, write down. Sometimes raw material is based on economic order quantity model. Economic order quantity model. In that case, raw material is equal to under root 2AO upon C. What is A here? Annual consumption of raw material. Annual, this you already know. I am just writing to complete my notes. Your notes will be very useful one day before the exam or for revision. If I ask you to prepare your note, most probably you will not do it. Ordering cost per order. You are so busy. Okay. Per order. So many priorities in your life. Who prepares notes nowadays? It is the teacher who has to do everything. Only one thing is pending from the teacher side. Rest everything they have done now. Exam, maybe in future with technology that can also be done. So point number C is carrying cost. P means carrying cost per unit per annum. Carrying cost per unit per annum. Carrying cost per unit per annum. Is it right? Point number 13. Write down point number 13. Sometimes cash balance may be based on Baumol model. In that case, cash balance will be equal to under root 2AT upon I. 2AT upon I. So where what is A? A is annual cash requirement. You have to add all those expenses which will be paid in cash. Do not add those expenses which will not be paid in cash. Okay. So annual cash requirement means sum of all expenses which are paid in cash, which are paid in cash. If you are going to pay by net banking, NEFT, RTGS, check, then don't consider. Then what is T? T is transaction cost per transaction. Transaction cost per transaction. And what is I? Opportunity cost per annum. I means interest, basically interest rate or opportunity cost per annum. So this is how sometimes in some questions you may be required to find out cash balance. Find out cash balance. Okay. Point number 14, write down. Sometimes safety margin is required. Sometimes safety margin is required. It means additional amount to be kept for unforeseen contingencies. Is it right? Additional amount to be kept for unforeseen contingencies. Additional amount to be kept for unforeseen contingencies. And one last point, write down. Finished goods may or may not include administrative cost. May or may not include administrative cost. Write a note accordingly. Write a note accordingly. May or may not include administrative cost. So write a note accordingly. Is it right now? Say yes. So have you understood this entire note? Now we'll see the application. Theory is not enough. Application. So few important questions we are going to take that will revise working capital chapter. Okay. So you will revise this whole thing that I have dictated you again. And what else you have to study? Some theory part is there in this chapter, like factors affecting working capital, what is conservative, moderate, aggressive policy with respect to working capital. Okay, so that basic theory you will study. But in the exam, mostly two types of question will be asked. One is to find out the net operating cycle period, and from that compute the working capital required, and second is to find out the working capital required by calculating each element of current asset and current liabilities. So we will take one question right now on operating cycle period. Are you ready? Those who are ready can come to question number 6 in our book. This question is from May 18 RTP and March 22 MTP for 10 marks. 10 marks you will score fully if you do it properly, right? So we begin. Question. Question is in our class notes, 6th number. Following information is forecasted by Pooja Limited for their ended 31st March 2000 exact. This is opening balance and this is closing balance, and I can use it to find out average. Yes or no? Raw material, WIP, finished goods, debtor, creditor. So for all this you will have to find out average. Then they have given you annual purchase of raw material, all credit 4 lakh. Annual cost of production 7,50,000. Cost of goods sold 9,15,000. This is annual operating cost. This will be required for estimating working capital. Annual sales all credit 11 lakh. This is purchase given here, underline, and these are the opening and closing raw material. So from the purchase and opening stock and closing stock, you will have to find out raw material consumption, and after computing raw material consumption you will compute the raw material holding period. Is it right? Purchase and consumption of raw material in this question are not equal because the opening stock and closing stock of raw material are not equal. So raw material will be based on consumption of raw material, creditors will be based on purchase of raw material. You may take 365 days in a year, required net operating cycle period, number of operating cycle, and the amount of working capital requirement using operating cycle. Is it right? Then why are you waiting? Why are you not solving? So first you make a small working note. Step 1, raw material consumption. If opening stock and closing stock of raw material are not equal, consumption and purchase of raw material will not be equal. Is it right? So how do I find the raw material consumption? So write down is equal to opening stock of raw material. This is you have at the beginning, plus purchase of raw material. This is you have purchased, and minus what is left with us, closing stock of raw material. So this will give you raw material consumption from raw material purchase. Important formula. This also you can add in the list of formula. Okay. This also you add in that list of formula. So now you solve. Give me answer. Opening stock of raw material. From the table first line. Purchase 4 lakh. Purchase is 4 lakh is right. Minus closing stock first line second column. 65356. Very good. 379644. Up to this you have reached. Say yes. Step 2. Calculation of net operating cycle period. Calculation of net operating cycle period. So we'll prepare in a tabular format. Serial number, particulars, formula, calculation, last column, number of days. So that will give all answers at one place. Keep one line blank after each point, okay? Unless you are extremely poor, you can't afford one waste line wastage also. Is it right? First, write down what we will write down first point. Raw material storage period. In the exam, shortcuts are not allowed. You will write full raw material. In the class right now, if you want, you can use RM. So first you draw the format, one full page. Take a scale, draw the lines. Otherwise all numbers will start fighting with each other. Okay. Formula for raw material storage period. I have given you the formula. Anybody, little faster. Average stock of raw material upon what? Average raw material consumption per day. This formula is so easy. And what is your average stock of raw material? If you look at the question, 45,000 is opening, 65,356 is closing. So this you first divide by 2. Then you divide by consumption of raw material. You can see in the above working note 379,644. And how many days in a year they are asking you to take? 365 days. 365. Kindly solve and round off the last digit. Round off the last digit. 53 days. 53 days. One line blank. Point number B. WIP holding period. So formula, now you have understood the pattern. Same, write down average stock of WIP divide by average cost of production per day. Average cost of production per day. Go to question book. You will find WIP opening balance is 35,000. Closing is 51,300. Divide by 2 first. Average. Cost of production last fourth line 7,50,000. Divide by 365. Divide by 365. So now the student will reply final figure in number of days rounded off. 21 days. We are getting 21 days. Up to this you have done. Point number 3, write down finished goods storage period. Finished goods storage period. Anybody for formula? Average stock of finished goods upon average cost of goods sold per day. COGS per day. Cost of goods sold is COGS. So you look at the problem. 60181 plus 70175 divide by 2, and your cost of goods sold is given in the problem 9,15,000 divide by 365. Come on student, 26 days. 26 days. Then we write down point 4, debtors collection period. average debtors divided by average credit sales per day. Average debtor, question book, fourth line, 1,12,123 plus 1,35,000 divided by 2, and this whole thing you divide by what is your annual credit sale? 11 lakh. Very good. Divide by 365. Solve this mathematics, whatever you know. Yes, come on, student. Why are you not replying? Yes, please solve. 41 days. Point 5 write down here. Gross operating cycle. This is called gross operating cycle. So you will add the first 4 items. So that will give you gross operating cycle. A, B, C, D. Sorry. C, D, E. So A plus B plus C plus D. Add 141 days. Point number F write down. Creditors payment period. Creditors payment period formula you will write. What formula you will write? Average creditors or average accounts payable divided by average credit purchases per day. These are the correct formula, logical formula. So now you go to question book, fifth line, creditors 50079 plus 70469. This you divide by 2. Then your purchases all credit 4 lakh is written. 4 lakh is written in the book. Now please answer. Why are you not answering? I don't understand. $55 days. So one last line for this table, write down. Net operating cycle period. Net operating cycle period. Net operating cycle period will be E minus F. E minus F. 141 minus 55. So 86 days is your first answer. Done. Any query on this? Close this table. Close this table. Below that, write step 3. Number of operating cycles in a year is equal to number of days in a year divided by net operating cycle period. So number of days they have mentioned 365 and this you have computed 86. So it will be 4.244 times number of operating cycles. Got it? Step 4. Amount of working capital required. This is one typical exam question. They can ask you where they will test basic knowledge of a student is equal to annual operating cost divided by number of operating cycles. Proportionately, basically you are computing. The logic is proportionate. Number of operating cycles. So annual operating cost is given in the problem 9,50,000. Number of operating cycles are 4.244. So you will get answer in rupees 223,836 approximately. Write down alternatively. We can solve by one more method. 86 days divided by 365 days proportionately into 9,50,000, that is annual operating cost. Okay, it's just a proportionate calculation. This is required for 1 year, but your one cycle is only 86 days and it keeps rotating. So you don't need 9,50,000 working capital. It will rotate 4.24 times. So each cycle will require how much? 223, around 836 approximately. Both way you can solve. Any query? No. Why? This was one question on operating cycle. Now you come to question number 12. Question number 12, where we will learn the calculation of working capital requirement. Okay. This question is from May 2020 MTP for 8 marks. Similar questions have been asked in the exam and in the study material also. So are you ready? Say yes, we are ready. We are always ready. Only you are not ready. So question number 12 is cost sheet of A&R Limited provides the following particulars. Raw material cost per unit 200, direct labor cost 75, overhead 150, total cost 425, profit, selling price. The company keeps raw material in stock on an average 4 weeks. Underline 4 weeks. Raw material underline, 4 weeks underline. Work in progress on an average for 1 week. So WIP underline, 1 week underline. And finished goods on an average for 2 weeks. So this time they have given you the data in weeks. So we'll take 52 weeks in a year for calculation purpose. The credit allowed by supplier 3 weeks. So write down credit supplier 3 weeks. Credit company allows 4 weeks credit to debtor. 4 weeks and debtors underline. Lag in payment of wages is 1 week and lag in payment of overhead expenses is 2 weeks. Company sales 1/5 of the output against cash. Underline 1/5 of the output is sold in cash. So 450 is sold on credit. So that will affect my debtors calculation and maintains cash in hand and bank 2,50,000. Prepare a statement showing estimate of working capital needed to finance an activity level of 2,60,000 units of production. Okay. Assume that production is carried on evenly throughout the year and wages and overheads accrue similarly. Work in progress. Last line is very important. If you miss the last line, your answer can go wrong for WIP part. WIP stock is 80% complete in all respects. What does that mean? WIP is 80% complete in all respects. 80% material, 80% labor, 80% overhead. 80% for material, labor and overhead. All respect means material included. Is it right? In some questions they give material 100% complete, labor and overheads are 80%. Then your answer will be for labor and overhead 80% we will take. This question is not clear whether we need to solve it by total approach or whether we need to solve it by cash approach. What should we do? For understanding purpose, we'll solve by both the approaches. So one more practice on total approach as well as cash approach. So are you ready to solve?
Yes, sir.
Then why are you sitting? Write down statement showing working capital required. Statement showing working capital required. Statement showing working capital required. Statement showing working capital required you have written. Serial number, particulars. Presentation is an art and the difference between ordinary student and rank holders is their presentation aspect also. Okay. So serial number, particular, basis, then total approach, cash approach. In cash approach, we will not take depreciation and profit. But in this question, depreciation is not there. Depreciation is not there, but profit is there. So you will have to adjust debtors. So current asset, now keep one page blank and write down after one page blank working note 1. I'll prepare some working note. Weekly production. Weekly production will be equal to annual production divided by 52 weeks.
Yes, sir.
Because all elements of working capital are given in weeks. Can you see that? So every time instead of dividing by 52, let us just divide it once. What is your annual activity? 2,60,000 units. Last paragraph. Divide by 52 weeks. Divide by 52. Is it 5,000 units per week? So now my task will be very easy. 5,000 units per week. 5,000 units per week. So come back to your main page. Write down first. First point, write down inventories. Under inventories, write down A, small a, raw material. The basis for raw material is 4 weeks. 4 weeks. 4 weeks means the raw material of 4 weeks requirement are kept in the stock. 1 week requirement is 5,000 units. So I will take 5,000 units into 4 weeks. And what is the rate? 200. 200 is the rate of raw material, first line of the question. Do not divide by 52.
per week.
Already done.
Sir.
Kindly multiply. 40 lakh rupees write down in both the approaches because raw material does not have depreciation or profit. Point B, write down WIP. WIP is 1 week. So listen to me, 5,000 units into 1 week into your cost is 425 rupees per unit multiplied by 80% because all three items are 80% complete, material, labor, overhead. So first I got the total and then I multiplied by 80%. So there is no need to do separate calculation for material, labor and wages because all three components are 80% complete. So what is your answer? 17 lakh, and there is no depreciation in the problem. So cash approach also will have same answer. Point number C, write down finished goods. Search in the problem finished goods holding period 2 weeks. 2 weeks. Write down 5,000 units into 2 weeks into rupees 425 cost per unit. Finished goods will be based on cost per unit 425. So please, why don't you react and reply? 42 lakh 50,000. Again same because there is no depreciation. If depreciation was given under the head overhead, then we'll reduce it and then multiply. But it is not given. Point number 2, write down here debtors. Somewhere below it's written debtors are allowed 4 weeks credit. 4 weeks. Now here wait, answer will be different. Total approach answer will be based on selling price. Cash approach answer will be based on total cash cost. Is it right? Plus one more adjustment is there. 1/5 of the output is sold against cash. So 4/5 of the output is credit sale. Oh my God. So I will take 5,000 units into 4 weeks. This will be multiplied by 4 by 5. Because you don't sell 20,000 units in credit. You take 4/5 of 20,000 units on credit. And in total approach multiply by selling price 500 rupees. Good student would have calculated by now. 80 lakh. Other students wait for instruction. Then they react. Cash approach means I will not consider profit. So 5,000 into 4 by 5. But this time you multiply by 425. 68 lakh. And point 3, write down cash and bank. Cash and bank in calculation column given 2 lakh 50,000. Second last paragraph 2 lakh 50,000. So write down total A. Take your calculator imported from China. Solve. Please reply fast. First column. Second column is 1 crore 70 lakh. First column. First column. First column. Anybody? First column. 1 crore. Final. You are not able to read whether it is lakh or crore. Point number B. Okay, it's okay. I also sometimes make the same mistake, so I can understand your problem. Point number B, write down. Many people can't read lakhs or crore in calculator. You are not the only one. That is why don't buy Chinese calculator. It is Japanese, near China only. So write down. First you write down creditor for material. Creditors for material 3 weeks. 3 weeks means 5,000 units into 3 weeks into what is the rate you will apply, 200 rupees or 425? You will apply 200 rupees raw material cost per unit. So please suggest me the answer. This much you can do. Is it 30 lakhs? 30 lakhs, 30 lakhs will be same. Point B, write down. Wages payable. What is the time lag in wages payable? Is it 1 week? Second paragraph below, 1 week. Overhead is 2 weeks. So this is 5,000 into 1 week into what is wage rate? 75? 75. Kindly respond. 3,75,000. Very good students. 1 point C, overheads payable. Here the time lag is 2 weeks. 2 weeks. So 5,000 into 2 weeks into 150 does not include any depreciation. So this is 15 lakh, same. Because there is no depreciation, we will take the same figure. Now you write down total B. Same in both the column. 48,75,000. Point C, write down net working capital. A minus B. A minus B. First column. Come on, first column. A minus B. 1 crore 33 lakh 25,000. Next column. 1 crore 21 lakh 25,000. Note, write down. It is assumed that opening and closing balances. It is assumed that opening and closing balances of inventory items come on, fill in the blanks. It is assumed that opening and closing balances of inventory items are same. So if it is same, what is the impact? Production is equal to sales and purchase equal to consumption of raw material. Purchase equal to consumption, sale equal to production. Is it right? So the implication is that there is no difference between consumption of raw material and purchase of raw material, production of finished goods and sale of finished goods. This answer is over. Any query now? No query. One more practice. 22 number. So kindly come to 22 number. One more practice we will do. Is it right? Sorry, 23 number. Come to question number 23. Question 23. No, 23 I will not take, that is boring. I will take 22. Come to question number 22. Question is printed in the book. So let us read the question from the book. Okay. This question is in the study material of the institute also. Have you already done this? Or it is pending? Aneja Limited, a newly formed company. So one question I wanted to take on a newly formed company. Underline newly formed company. Underline newly formed company means no opening stock of raw material, WIP, finished goods. Applied to a commercial bank for the first time for financing the working capital requirement. The following information is available about the projection for the current year. Estimated level of activity 1,04,000. Completed unit of production and 4,000 units will be in WIP. So finished goods they are going to produce. Finished goods production is 1,04,000 and WIP in the stock will be 4,000. So what will be the sales quantity? What will be the sales quantity? Sales quantity will be, wait, not 1 lakh. FG is different. WIP is different. Sales quantity is pending. Based on the above activity, estimated cost per unit is given. Raw material, direct waste, overhead, it is written excluding depreciation. So depreciation is not in that 60 rupees. And then total cost 170, selling price 200. Raw material in stock, average 4 weeks consumption. WIP, assume 50% completion in respect of conversion cost. Material issued at the start of the processing. Finished goods in the stock. Finished goods in stock is 8,000 units. So what is my sales quantity? 1,04,000 minus 8,000. 96,000 units. These are my units detail. Purchased, production 1,04,000, WIP 4,000, sales quantity 96,000 and FG in the stock 8,000. This time production and sales are different because there is no opening stock. It's a new company. Next line is credit allowed by supplier is 4 weeks, credit allowed to debtor 8 weeks, time lag in payment of wages 1.5 weeks, cash balance 25,000, assume production is carried on evenly throughout the year and wages and overheads accrue similarly. All sales are on credit basis only. You are required to calculate the net working capital required. You are required to calculate the net working capital required. Now there is a small problem. What is the problem? They have not mentioned whether it is based on. Whether it is based on total approach or cash cost approach. So what should we do? Only one figure will be different. Debtors. Other figures will be same because there is no depreciation. If there is no depreciation, WIP and finished goods will be same. But debtor in cash cost approach will be based on cash cost of selling price, and under total approach will be based on selling price. Okay. So first you write down this quantitative details. Write down quantitative details. Step 1. Quantitative details. Under that write down first point A, finished goods production 1,04,000 units, WIP units 4,000 units. Then point C write down finished goods in stock 8,000 units, finished goods in stock 8,000 units. And point number D write down sales quantity A minus C 96,000 units. It's a new company. It is a new company. So in a new company, in the first year there is no opening balance, but there are closing balances. Is it right? In the first year there is no opening WIP, but there is closing WIP. So you will need to consume raw material not only on the finished goods produced, but also on the WIP at the end of the year. So please write down step 2, raw material stock. Raw material stock. For that I need to find out the consumption first. First point A, raw material consumption. Please write down along with me. Write little fast. Raw material consumption will be on two items on finished goods. On the screen, finished goods produced is 1,04,000 units. We are solving question number 22 from our study material, and you will find this question in the institute study material also. And the rate of raw material is 80 rupees. So would you care to reply? Would you care to reply? 83,20,000. And you will also consume raw material on WIP because it's a new company. There was no opening WIP, but there will be closing WIP, which will require 100% material. 4,000 into 80, 3,20,000. So in the first year of operation, your consumption of raw material would be 86,40,000. And point number B, write down raw material stock. What is the time lag in raw material? Somewhere below. Raw material in stock 4 weeks consumption. 4 by 52. Take your calculator and reply. 4 by 52. 6,64,000. So this is raw material stock. Now write down step number 3. WIP stock. WIP stock is very easy. Right hand side rupees. First point A, raw material. So raw material in WIP will be 3,20,000. In bracket write step 2. Same figure. You want to write again? Write 4,000 into 80. Point B, labor cost. So 4,000 units, rate 30, but it is 50% complete. Student will now suggest me 60,000. Very good. Overheads 4,000 units into 60, but it is 50% complete. Total of the WIP, is it 5 lakh? Students are saying 5 lakhs. WIP is 5 lakh. Any query now? No query. Then write down step 4. Finished goods stock. Finished goods stock. What is the finished goods storage period? Not required. It is given quantity. 8,000 quantity is given. So I don't have to do anything. Just take 8,000 units and multiplied by the cost per unit. Rupees 170. Given in the problem. 170 cost per unit. It does not include depreciation. 13,60,000. Step 5. Daters. Daters. What is the collection period for dater? Is it 8 weeks? 8 weeks. So first write down total approach. Under that small a, total approach. So here we'll take selling price for calculation. So you will write 8 by 52. What is your quantity sold? 96,000 units. And what is the selling price per unit? Selling price per unit is 200 rupees. So if you are taking total approach, your answer would be 29 lakh 53,000. Wait, I will also check. Otherwise sometimes students fool me. So 200 into 96,000 into 8 divided by 52. 2953846. Oh, wonderful. Then write down B, cash approach. Under cash approach, I will take 8 by 52 into 96,000 units. Do we have any cash sale in this problem? No, all sales are on credit basis, written in the last paragraph. So 170. Please solve and answer. 25,10,000 is right. So this is your daters. Now write step 6. Creditor for material. Creditor for material, right hand side rupees. First we need to find out purchases. Is it right? First we need to find purchases. So under that you write down small a, raw material consumption. This is the first year of the operation, so opening stock is not there but closing stock is there. Raw material consumption, you go to step 2. I will take you to step 2 on the left side of the screen. 86,40,000. 86,40,000. Step 2. Add closing stock of raw material. Step 2 again. 6,64,615. Point C, less opening stock of raw material. 0 because it's a new company. Draw one line and tell me purchase figure 93 lakh 93 lakh 4,615. This is purchase. And point number B, write down creditors. What is the time lag in case of creditor? 4 weeks. 4 by 52 into 9304615. Good student would have computed by now. Others are waiting. 7,15,000 740. One more step. 7, write down wages payable. Wages payable, how do you compute? So first I will compute wages on finished goods produced. So you are going to produce 1,04,000 units. On that you will pay wages of 30 rupees. So how much is that? 1,04,000 into 30. 31,20,000. And B, write down wages on WIP. Go to your WIP working note. Step 3. Step 3. I will take you to step 3 on the screen. Can you see below right side 60,000 rupees is your WIP related wages? 60,000. So total wages we are going to incur 31,80,000. And point C, wages payable. What is the time lag in the problem? 1.5 weeks divided by 52 into 31,80,000. 91 lakh 91731. What about overheads? Nothing is given. Ignore overheads payable. Ignore, not given. So now we have completed all working notes. Just you have to arrange them. Is it right? Any query on this side? So step number 8, write down working capital required. Format, serial number, particulars, and we have already done the calculation. We just need to put them in the answer. Step number, only give reference of step number. Total approach, cash approach. This problem has not given us which approach to follow. So we are going to solve by both. So first you write down point A, current assets. Under that write down 1, inventories. Under that write A, raw material. Go to step number 2. Step number 2, 664, 615. 664, 615. B, WIP, step number 3. Is it 5 lakh? Say yes or no. 5 lakh. Then C, finished goods. Step number 4. 13 lakh. Step number 4. Presentation is also important. Institute should understand. Point number 2, write here debtor. Step number 5. Total approach answer is different. Cash approach answer is different. Total approach answer is on the screen left side 2953846. 2953,846. And cash approach answer is 2510769. And point 3 write down cash and bank. Cash balance. Read the problem. Find the cash balance. This is given 25,000. Now take out your calculator and write total of A, current asset total. Anybody who would like to volunteer? Solve fast. 55 lakh 03461, and try the next one. Try the next one. 50 lakh 60,384. This is a very important question we are solving. You can mark it as very important for your next exam. And if you have not practiced it, you can make mistake because it's a new company. In new company, we have to do calculation in a little different manner. So current liability has two items. One is creditors working note 6. Let us go to working note 6. 7115740. It will be same in both columns. And 2 write down wages payable. This is same in both the column. Step number 7. 91731. 91731. So first you tell me the total of these two figures. Anybody who would like to answer? 8,07,471. 8,07,471 is right. And one last line, write down point number C. Net working capital A minus B. First column, anybody would like to volunteer? First column. 46,95,991. 990. Okay, 990. Last column. Come on, last column. 42 lakh 52,000. 91913. 4252913. Is it right? 4252913. So this is how you will solve a question of a newly formed company. It does not have opening stock of raw material, WIP or finished goods. So that was a very good question for understanding purpose. Now this wonderful chapter is over. Thank you very much. I hope you enjoyed. Yes. Today we'll revise treasury and cash management, which is a part of working capital management. So in treasury and cash management, it is more of a theory topic, but we have to also prepare what is called cash budget. So first you write down a note, treasury management. Treasury management. So what is treasury management? Treasury management is management of funds and risk management. Management of funds and risk management. Second thing is they will ask you what are the functions of treasury management. Functions of treasury management. So you will write following functions of treasury management. A, you will write they have to manage cash, so cash management. B, write down currency management. They have to deal in different currencies, so how to reduce the risk. Then fund management, point number C. They have to raise funds for their company from different sources, debt, equity. Point number D, write down maintaining good relationship with banking. So banking, cordial relationship with bank. And point number E, corporate finance. So these are the functions of treasury management. But the most important part of this chapter is cash budget. Cash budget is estimation of future receipt and payment of and payment. Cash budget is estimation of future receipt and payment. Then format of cash budget. Format of cash budget. So depending on the question, you will have to prepare cash budget for 3 months or 6 months or 1 year. So whatever they will give you, January, February, March, April, May, June, it can be daily also. Okay, so we will first write opening balance, which opening balance of first month they will give to you. Then you will add receipt. So all inflows of cash will be written. Non-cash item will not be written. Bonus share issued will not be written. Depreciation will not be written. Conversion of debenture into equity share will not be written. Then you will write total cash available. It will be A plus B. So you will take the total of cash available. Point number D, you will write payment. Under this you will write all payments made in cash. Then point number E, you will write balance. Balance will be C minus D. Total cash available minus total payment is balance. If the problem does not require you to keep minimum cash balance, then only 5 points are enough. But some question may require you to maintain minimum cash balance also. And they will also ask you that in case of surplus, make investment. In case of deficiency, you can borrow money. If the problem requires you to maintain minimum balance and invest surplus money or borrow deficiency, then you will add following more points, which I am going to write in red font. Point number F, minimum cash balance. If problem asks you to ensure that company maintains minimum cash balance. Point number G would be surplus or in bracket deficiency, E minus F. E minus F. Point number H will be If you have surplus, then you will invest the temporary surplus. Investment of temporary surplus. If you have surplus in point number G, after keeping minimum balance, if you are getting a positive answer, that is surplus. Investment of temporary surplus. Then in case if you have deficiency, then either you will redeem the investment or borrow funds. Is it right? Point number I will be used when there is a deficiency. Either you redeem the previous temporary investment or borrow funds. Point number J will be closing cash balance. Closing cash balance. So closing cash balance will be your balance in point number E minus investment if any and plus borrowing if any. So that will give you closing balance. The closing balance of first month will become opening balance of the next month. So next month this opening balance you will take it from closing balance of January. If the problem does not have minimum cash balance or investment or borrowing, then only write 5 points. Is it right? Then only you will write just 5 points A, B, C, D and E. Then in your syllabus you have next concept is float. Float means time lag between two events. Time lag between two events. That is delay. Right? That is time lag between two events. So what are the examples of float? Examples of float are check mailing float. That is the gap between the customer sends you the check and the check is received by the seller. Then check processing float. The time between check received and check deposited in the bank. And then we have bank processing float. The time taken by the bank for clearance of the check. You have deposited on Monday but check clears on Thursday. So that is bank processing float. Okay. Then methods of reducing float. Methods of reducing float. So under methods of reducing float, in your syllabus you have concentration banking, where you will open a collection center for collecting checks of that city and depositing in the company's bank account. And there is a logbox system where you will open a post office box in the city of the customer and instruct your bank to collect the check from that post office box and deposit in your account. These are the methods of reducing float. Then we have cash management models. Next heading, write down cash management models. Under cash management model you have William J. Baumol model. William J. Baumol model. So according to this model, optimum cash balance is equal to under root 2AT upon I, where A is equal to annual cash disbursement. Annual cash disbursement. T is the transaction cost. T means transaction cost, which is brokerage commission per transaction. It is assumed that transaction cost per transaction will remain fixed, and I stands for interest rate or opportunity cost per annum. Is right. Total transaction cost. Total transaction cost will be equal to number of transactions into transaction cost per transaction. Total transaction cost will be equal to number of transactions into transaction cost per transaction. But one more thing I need to tell you, number of transaction will be equal to total annual cash disbursement upon optimum cash balance. That will give you the number of transactions. Number of transactions will be annual cash disbursement divided by optimum cash balance. Okay. Below that, write down, continue, average cash balance. Average cash balance will be optimum cash balance divided by 2. Optimum cash balance divided by 2. Total interest cost will be equal to average cash balance into interest rate per annum. Basic thing, but you should know. In one exam, they have asked this basic question, and therefore total cost will be equal to total transaction cost plus total interest cost. Total transaction cost plus total interest cost. Right? Then there is one more model called Miller-Orr. This is the second model, Miller-Orr cash management model. So this I will explain with the help of a diagram. This Miller-Orr cash management model says the firm will define 3 limits of managing cash: lower control limit, upper control limit, and return point. As long as the cash balance are fluctuating in this range, no action is required. But if the cash balance goes above or goes below this range, then the firm will have to buy or sell securities and reach the return point. So let us call it URL. Okay. So see, the cash balance will fluctuate. If it is fluctuating between the upper control point and lower control point, no action required. But the moment it reaches the upper control point, one action will be required here, and that action will be buy investment. Don't carry excess cash. And how much cash, how much investment you will buy? U minus R. This much, so that the balance becomes equal to return point. And again, let the cash balance fluctuate. One day, suppose it reaches the lower control point, one action will be required here. What is the action? Sell investment. Sell investment equal to R minus L. And you will again come back to, and again it will fluctuate. So this way it continues. So this is called Miller-Orr cash management model. This x-axis is time. X-axis is time. Sometimes you are right. Okay. So this is Miller-Orr cash management model. So now we'll go to one question. There is a question at the end of your chapter. Just check. November 22 exam question. Question number 13. This is November 2022 exam question for 5 marks. Question is K Limited, just check the number, this question, K Limited 13. K Limited has quarterly cash outflow of rupees 9 lakh. Underline this term, quarterly, means 3 months, of rupees 9 lakh. So annual will be 9 lakh into 4, 36 lakh. Okay. So annual cash disbursement will be how much? If it is 9 lakh per quarter, so it will be 36 lakh, arising uniformly during the quarter. Company has an investment portfolio of marketable security. It plans to meet the demand for cash by periodically selling the marketable security. Marketable securities are generating a return of 12% per annum. So the interest rate is 12% per annum. This is for formula. The transaction cost of converting investment into cash is 60 rupees. So this is transaction cost per transaction, which we will call T, is equal to rupees 60. The company uses Baumol model to find the optimum transaction size for converting marketable security into cash. Take 360 days in a year, calculate company's average cash balance, number of conversions each year, and the time interval between two conversions. So there are 360 days in a year. Divide by number of conversions will give you time interval between two conversions. Is it right? So how do I solve this question for 5 marks? Please write down. Write down in detail. One day you have to appear in the exam also. Write little fast. First write quarterly cash outflow. Quarterly cash outflow rupees 9 lakh. Quarterly cash outflow rupees 9 lakh. Therefore annual cash outflow 9 lakh into 4 quarters. Come on, 9 lakh into 4. 36 lakh rupees. Then write down transaction cost per transaction. Transaction cost per transaction. rupees 60. Opportunity cost per annum. Opportunity cost per annum in bracket I is equal to 12%. I is equal to 12%. So all basic data first you will write. Presentation is important. Then write down as per Baumol model. As per Baumol model. As per Baumol model, optimum cash balance equal to under root 280 upon I. 2 into 36 lakh into 60 divided by 12% takes square root. Anybody who wants to reply? 60,000. 60,000 is your optimum cash balance, means you will convert investment into cash 60,000 rupees at a time. So you will convert investment into cash 60,000 rupees every time. Then you will use it. It becomes 0. Again you withdraw 60,000 rupees. Now write down, the question was what is average cash balance. Average cash balance is not 60,000. You will withdraw 60,000 on day 1, but then it will get used and it becomes 0. So what is my on an average cash balance? Optimum cash balance divided by 2. Optimum cash balance divided by 2. 60,000 divided by 2. So this is average cash balance you are carrying. Because you are going to consume 60,000 slowly, one day it becomes 0. So average means 0 plus 60,000 divided by 2. Or directly take 60,000 by 2, 30,000. Next question was number of conversions each year. Number of conversions each year. Number of conversions each year. So number of conversions will be annual cash outflow divided by optimum cash balance. Annual cash outflow divided by optimum cash balance. 36 lakh divided by 60,000. Are you getting 60,000? 60 times 60 conversions. So one number of conversions are 60. In a year there are 360 days. And you have to withdraw 60 times in a year. So after a gap of how many days you are going to withdraw money? 360 days are there. You are withdrawing 60 times in a year. So write down, which is your question number 3 in the question book. Time interval between two conversions. Time interval between two conversions. You will write 360 divided by 60. So what will be your answer? 6 days. So after every 6th day, you have to convert security into cash. This will minimize your total opportunity cost and transaction cost. This will minimize your total opportunity cost and transaction cost. So that was a question on Baumol model asked in November 2022 exam. Now we'll take question number 10. Question number 10 will not take. We'll take 11 number. Come to question number 11. 10 number we have done in the regular class, yes or no? So I would give you a different question. Question number 11. From the study material, good question. One problem will practice on cash budget. Consider the balance sheet of Maya on 31st December 2020. Underline the balance sheet date 31/12/2020. The company has received a large order and anticipates the need to go to its bank to increase its borrowing. As a result, it has to forecast its cash requirement for January, February and March 2021. Okay. So my cash requirement has to be estimated for which 3 months? January, February and March. Typically, the company collects 20% of its sales in the month of sale. 20% is collected in the month of sale, 70% in the subsequent month, next month, and 10% in the second month after the sale. So this will be required for collection from debtor. This will be required for collection from debtor. 20% in the same month, 70% in the second subsequent month, and 10% in the second month after the sale. All sales are on credit basis only. Now you are given one balance sheet on 31st December. So this is the balance sheet. We will call it opening balance sheet. Is it right? Rupees in 1000. Share capital, retained earning, long-term borrowing, accounts payable, loan from bank, other liabilities, net fixed asset, inventory. So this is opening stock. This is opening debtor. This is opening cash and bank. This is opening creditor. Understood? Which may be required while solving. Purchase of raw material are made in the month prior to the sale. Purchase of raw material are made in the month prior to the sale and amounts to 60% of the sale. Payment for these purchases occur in the month after purchase. Is it right? Now understand. Sale. Assume sale is in February. So when will purchase be made? Purchase will be made
prior to the month of sale.
in which month?
January.
Purchases will be made in January, which will be equal to 60% of the sales value. And when will the payment for these purchases will be made? Payment will be made after 1 month. So which month? In February only. So in short, if suppose you are given February sale figure, let us say February sale is 1000. It will be purchased in January 600 rupees. But the payment will be made in February 600 rupees. So can I directly take 60% of the respective month sale as payment to the supplier?
Yes, sir.
Can I take 60% of the respective month sale as the amount paid to supplier?
Yes, sir. Okay.
Next line. Labor costs including overtime are expected to be 1,50,000 in January, 2 lakh in February and 1,60,000 in March. Very easy. Selling, administrative, tax and other cash expenses are expected to be 1 lakh per month for January through March. So 1 lakh every month. Actual sale in November and December and the projected sale for January through April are as follows. So November and December are actual sale and these are projected, means estimated. because we are preparing a cash budget. On the basis of this information, prepare a cash budget and determine the amount of additional bank borrowing necessary to maintain a cash balance of 50,000 at all times for the month of January, February and March. So how much is the minimum cash balance required?
So 50,000.
So if your balance is below 50,000, you will have to borrow money, additional bank loan you have to take. Not only that, they have also asked you to prepare pro forma balance sheet on 31st of March. So first we will concentrate on cash budget. So for that I will require one small working note to write down step number 1. Good student will start writing calculation of collection from debtors. You can directly do in cash budget also, or you can prepare a working note, whatever suits you. Choice is yours. Is it right? So write down month of sale. Then write down sales amount and write month of collection. Under that 3 columns, January, February, March, because this is the scope of our cash budget. Any other presentation, if you have learnt, you can follow that. No problem with that. Okay. So we'll start from November, December, January, February and March. Sir, why you have written November? Why you have written November? Because the question says, if you sell in the month of November, then how much will be collected in November only? 20%, 70% in December, 10% in the month of January. So therefore I require November sale data also. Haji. So write down, dear student, November sale amount is 500, 600, write down rupees in 1000 in every format. 600 again, 1000 and March 650. Okay. Please understand, out of the sales made in November, 20% is collected in November, 70% is collected in December, but 10% will be collected in January. So please take 10% of 500. Is it 50? In bracket, if you have space, 10% of 500. Now come to December. In case of December, 20% sale has already been collected in December, but 70% will be collected in January. So 600 into 70%, 420, and 10% of 600 will be collected in February, 60. 10% of 600, 60. What about January? 20% in the same month, 70% in next month, 420, 10% in second month after the sale, 60, 10% of 600, second month after the sale, 2 months after the sale, February, 20% in the same month will be collected, 200, and 70% in the first month after the sale. How much is 70%? 700. In case of March, 20% in the same month. Haji? 130. So kindly tell me the total of collections made in January. January is 590. Wonderful. February 680. 890. One student is saying 890. Is everybody right?
Yes, sir.
Wait a minute. Because we have to prepare balance sheet also, I need to also check debtors balance on 31st March 2021. Debtors balance on 31st March 2021. I am asking you a question. What is the debtors balance on 31st March 2021? This January is fully collected. January is fully collected. What about February? In February you have sold 1000, but you could collect only 200 plus 700.
Yes, sir. 100 there.
So 100
100 plus
is
520.
out of February sale. 100 out of February sale plus, now you see 650 you have sold here,
And 130 has been
130 you have collected,
520.
plus 520 out of March sales. Have you understood? So that total 620 should appear in the balance sheet. Okay, so debtor balance on balance sheet as on 31st March 2021 will be 620. So easy to understand that sale made 1000, collected 900, so 100 is the balance. Sale made 650, collected 130, so 520 still outstanding. So total debtor balance will be 620,000. Any question on this? No question. Then you prepare cash budget now. Write down next heading, step 2. Student will write in step by step format. This gives more weightage to your mark sheet. Cash budget. Then write down for the period from January to March, if possible write year also, 2021. Is it right? So far understandable? Say yes. 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 Serial number. Particulars. And then write down 3 columns. January, February, March. First, you will write point number A, write down opening cash balance. Point number B, write down receipts. Point number B, write down receipts. Keep 2 lines or 3 lines blank. Then write down total cash available. Total cash available, A plus B. Everybody write down nicely. Revise again and again. Okay, revise again and again. Tell your friends also to revise. Point number D, payments. Under payment keep 5 lines blank. Then you will take total D, total of payment. Point number E, just write balance. Point number F, write down minimum cash balance required. This is a problem of minimum cash balance.
uncleared and clear.
There is no uncleared cleared. This is minimum cash balance. You want to keep a minimum amount in your
Yes, that's
wallet.
what I'm
There is no question of uncleared cash balance. Don't confuse, please.
okay because
So minimum cash balance requirement is how much?
50,000.
50,000. We will assume whatever is the date of or timing of payment given cleared in that month. Okay. Unnecessary, you are confusing different things. Point number next, surplus or deficit. Surplus or deficit. Surplus or deficit. Point number I, borrowing. So they are saying if there is a deficit, you will borrow. If there is a deficit, you will borrow oblique repayment of borrowing. If you have borrowed earlier, then you can repay also, so that you don't have to pay interest. Is it right now? Point number J, write down closing cash balance. Very easy format. I revise again. This type of format is required when the question says the company is required to maintain a minimum cash balance. The moment your balance is likely to fall below this, then you will borrow money. Or in case if you borrowed in previous month and you have surplus in the subsequent month, then you can repay the borrowing also. Why to pay interest when you have surplus cash? Okay. Otherwise, suppose there is no minimum cash balance required. There is no question of borrowing or investment of surplus. Then you will only write up to point number E. And it will become your closing balance, and next month it will become opening balance. So I have taken a problem which will serve all the concept. Okay. So are you ready? Ding, 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 ding. Yes. So how do I get opening cash balance? You will go to balance sheet of the question. Asset side last line. 50 rupees in 1000 you have written here. Write rupees in 1000 for those who have not written. 50. Then under receipt write down collection from debtors. That is the purpose of preparing step 1. Can you go to step 1 and guide me? How much was collection from debtor in January? 590. Next. 680. 890. Okay. Come to payment side. Receipt side only one item. Payment side we have payment to creditor. Point number D1. Payment to creditors. So we will take 60% of sales. 60% of sales of respective month. That I have explained it to you. Okay. If suppose sale of January is given, you will purchase in December but pay in January only. So my dear student, go to your question book. January sale is 600 into 60%. 60% of 600. Go to February sale. 1000 into 60%. 600. March 650 into 390. 60% of 650. 60% of 650. Is it right? Any query? Now what about that April 750 sale that they must have purchased in March, but payment is not yet made. So that will appear in accounts payable, right below this table. Before you forget, accounts payable. Accounts payable, because it is easy to explain right now. Accounts payable on 31st March 2021 will be equal to 60% of April sales. Yes, that is why April sales are given. So 60% of 750. How much? This will go in balance sheet. Rupees in 1000. So immediately you'll understand better. Debtors we have got, accounts payable we have got. Come back to your question. Now the problem is very easy. Keep the question in front of you. Below the balance sheet, second line. Question in front of you. Below the balance sheet, second line, labor cost including overtime are 1,50,000, 2 lakh and 1,60,000. Then selling, administrative, tax and other cash expenses are 1 lakh per month. So can I put these two numbers in payment? Yes, write down labor cost. Labor cost including overtime. Labor cost including overtime. You are writing in 1000. So first month 150. Question is from study material of the institute. You can check the question there. Second one is how much? 200. Third. Very good. Third write down. Third write down selling, administrative, taxes and other cash expense. Selling, administrative, taxes and other cash expenses. That is 1 lakh means 100. Can I write? We are writing in 1000. So I think we have covered all the three expenses given in the problem. So can you tell me total of payments, or one by one will close? Total of receipt 600 and
No, receipt 640.
640.
610.
610.
30 balance.
Balance is 30. Oh my God, balance is 30. But I require 50. So there is a deficiency. 20. So what I'll do? Borrow 20. So my closing cash balance will become 50 again. Point number E plus minus point number I. Is it right? Plus minus means if it is borrowing then plus, if it is repayment then minus. Repayment, what do you put in bracket? This 50 you take it to the opening balance in February. Calculator again. 730. Payment 900. 170 is already negative. And you require 50 positive balance. So sad. You have a total deficit of 220. So you have to borrow 220. Balance will again be 50. How this 50 has come? This minus 170 plus 220. E plus I. Okay? Many students find it difficult. Try again, you'll understand. 940 650 290 240 surplus. So should we repay? balance will be 50.
पूरा repaid.
Yes, balance is repaid. Okay,
So in this case, if they have given us the borrowing, then
one student is asking a doubt. Yes, come on, gentlemen.
so this is an ideal format in which we don't have interest rates and borrowing.
Yes, otherwise you have to compute interest also.
Accidentally they will,
You have to compute interest also. Rate will be given to you, and then they will give you when is the interest required to be paid. The interest may be required to be paid either next month or quarterly. So all interest calculate and pay in that respective month. Earlier they used to ask such difficult question, but now they have reduced the intensity of the problem now. So they have removed the interest part from this question. Okay. Earlier you had to compute interest on 20, interest on 240, and also consider in the expenses of the next month.
payment.
Yes. Oh. Anyway, so what is my cash balance? This 50 will go to balance sheet. So this is a balance sheet item. Okay. So in balance sheet, we will have fixed asset, same figure. Inventory we can calculate. Accounts receivable we have already calculated. Bank balance will be 50 as we have seen just now. This 50 will appear in balance sheet. Share capital will not change, but retained earning will change because we are given sale, purchase, labor, selling and administrative expense. So I need to recalculate retained earning figure. Long term borrowing will not change. Accounts payable we have computed. Loan from bank will not change because whatever we had borrowed has been repaid, and other liabilities also will not change. So I need to prepare two more working notes. Step 2 you have written. Right above this step 3, this was accounts payable on 31st March 2021. Step 4, write down inventories on 31st March 2021. So how do you compute inventory? First you will take opening stock. Opening stock is given in opening balance sheet. Can you refer and check 545? Point number B. Add purchases from January to March. So that will be equal to 60% of sale made in February, March and April. Yes or no? In the month of January, they will purchase an amount equal to 60% of February sale. So I will take 60% of February is how much? February is 1000, March is 650 and April is 750. So we'll have to take 60% of that. How much is that?
1440.
Final answer. Less cost of goods sold. Less cost of goods sold. Goods sold. You have sold some inventory also, no? So that will be equal to 60% of January to March sales. So that is 60% of January sale is how much? 600 plus 1000 plus 650. 1350 is the value of the inventory you have sold, cost of inventory sold. So what you are left with is closing stock. Learned student, please reply. A plus B minus C. Presentation should be such that people should be wondering who is your teacher. Okay. So what is your closing balance? Is it 635? Is it 635?
Yes, sir.
Louder, yes.
Yes, sir.
That's better. Now one more last working note and then balance sheet. Okay. So step number 5, write down. Step number 5, write down. Retained earnings on 31st March 2021. Right hand side 2 columns. Rupees in thousand. Rupees in thousand. First point A. Opening balance. First point, write down. Opening balance. Question in front of you. Balance sheet in
1439.
opening balance of retained earning in the opening balance sheet. Second line 1439. And point number B. Add profit for 3 months. No. First write down Roman 1 sales. Sales you will take from January to March. Please take on your Chinese calculator 600 plus 1000 plus 650.
2250.
2250. Then you write down 2 cost of goods sold, which we have computed here, 1350. Cost of goods sold in bracket 1350. Then you write down labor. Labor we have to add, take January to March, 150 plus 200 plus 160. Is it 510? And then write down point 4 other expenses. 100 into 3 times, 3 months. Each month 100. Is it 90? So point C will be balance on 31st March 21. A plus B. 1529. 1529. So let us now prepare last step. Very good question for 10 marks, possible 10 marks. Write down pro forma balance sheet. Pro forma means projected, not actual, based on our estimated figures. Pro forma balance sheet as at 31st March 2021. Rupees in thousand. Right here rupees in thousand. Liabilities, rupees, assets. Practice this question. They will ask in the exam, and then you may not be able to prepare balance sheet because you have to visualize. So many figures are required to solve it. Okay. So we'll start from the liability side. Any query you can ask me now. Equity share capital. No change. One line blank. Retained earning. In bracket you will write step 5 On the left side of the screen you will see below 1529. Long term borrowing, no change. So long term borrowing, student, please write same figure 450. Accounts payable, we have written one step number for that. Step number 3, correct. Is it 450? All explanations have been given to you. Loan from bank will not change because whatever was borrowed has been repaid. Understood? We borrowed 240, we repaid 240. And one last item, other liabilities. If nothing is given, we'll keep it same, 212. Go to asset side, net fixed asset, nothing is given, no depreciation, no purchase, no sale, 1836. Inventories we have computed in one working note. Kindly go to step number 4, previous step number 4. Anybody who wants to answer? Haji? 635. Okay. Accounts receivable we have computed in step 1. Step 1. Was it 620? And cash and bank in step number 2. Step 2, last month, last line. 50. Let us check whether the balance sheet is tallying or not. This is how companies also prepare their projected balance sheet and P&L account and cash flow statement. Okay. It's not telling. Why it is not telling, I don't know. This is 3141. Okay, asset side valid. If it is interest, then you have to check whether interest is paid or not. If it is paid, then it will go in cash budget. And if it is not paid, it will go to balance sheet. Yes, interest payable, but problem is silent on interest. Note, interest on borrowing is ignored. Interest on borrowing is ignored. Okay. If the question requires interest payment, then calculate interest and pay in that month as specified in the question. As specified in the question. If interest is not paid, then interest payable will appear in liability side of balance sheet.
Yes, sir.
Happy?
Yes, sir.
So kindly practice more questions from your study material, RTP, MTP, past exam, or if you have any other reference book, you can practice from that also. Okay. So either they will ask you a question on cash budget or Baumol model from this. So this chapter is
Over.
over. Did you like it?
Yes, sir.
Say like.
Like.
Yes. Okay, so today let us revise first receivable management, debtors management, part of your working capital management topic. So there is not too many formulas here, but still I'll give you some basic formula you will keep in mind. Okay, so write down receivable management. So companies can follow two types of policy. Which two types of policies? One is liberal credit policy or stricter collection policy. Liberal collection policy or stricter collection policy. Liberal means you will give more credit period, higher credit limit. Okay, more credit period is given to the customer. Higher credit limit is given. Take more credit. And stricter policy is opposite. Lower credit period. Lower credit period. Lower credit limit. So what are the advantages and disadvantages? The advantage of liberal credit policy is high sales. Sales will be high, high profit, high goodwill, high capacity utilization. High capacity utilization, lower cost because your sales will be high, so economies of scale advantage will be there. Same fixed cost will be apportioned over more quantity, so average cost per unit will go down. Is it right? Happy customers. But there are disadvantages also, like high bad debt. Risk of bad debt will be high. High collection cost, more debtors, more collection effort. High administration cost also. High administration cost, more record keeping, more documentation, more follow up. Okay, more reconciliation work. High legal cost also, because some customer may not pay, then you have to take legal action. What are the advantages and disadvantages of stricter collection policy? So the advantages would be now low bad debt. Bad debts will be less. Lower collection, lower collection, administration and legal cost. But there are disadvantages. What will be the disadvantages of a strict collection policy? sales will be on the lower side. If sales are low, profits are low. Low profit, write down. Lower goodwill, customer will not be happy. Lower capacity utilization. If sales are low, you are not fully utilizing your capacity. Cost will be high. Average cost will be high because fixed cost will remain fixed only. Dissatisfied customer. Some customer who wants higher credit period will not buy from you. So they will feel dissatisfied. Okay. So the question will be asked in the exam whether we should give more credit period or less credit period, whether we should increase the credit limit or reduce the credit limit, whether we should give more cash discount or less cash discount. So the decision will be based on cost benefit analysis. Is it right? So point number 2, write down evaluation of credit policies. The question which is usually asked in the exam is evaluation of credit policy. So here we have two approaches. One is called total approach and one is called incremental approach. Total approach, incremental approach. So what we will do in total approach, we will first calculate expected profit and compare it with the opportunity cost of funds invested in receivable. Opportunity cost of funds invested in receivables. Is it right? And then we'll compute net benefits. Then we'll compute net benefits. A minus B. If A is greater than B, credit should be granted. If A is greater than B, credit should be granted. And second, if there are many alternatives, select the alternative. Select the alternative with higher net benefit. Select the alternative with higher net benefits. Select the alternative with higher net benefit. And then you have incremental approach. Under incremental approach, we will calculate incremental profit. Incremental profit means under old policy, what was your profit versus new policy, what is your profit. And then you compare it with the incremental opportunity cost. Incremental opportunity cost of investment in receivable. And point number C, you will get incremental net benefit. You will get incremental net benefit, A minus B. And how do you take a decision? If incremental net benefits is positive, grant credit. Okay, and if incremental net benefit is negative, do not grant credit. And third, if there are many alternatives, select the alternative with highest what? Highest incremental okay, okay. If incremental net benefit here is negative, then do not grant credit. If there are many alternatives, select the alternative with highest incremental net benefit. Select the alternative with highest incremental net benefit. Up to this you have written. Point number 3, write down. Calculation of fixed cost. Calculation of fixed cost. In some problem, fixed cost is not given, average cost is given, variable cost is given. So the fixed cost will be equal to average cost per unit. Depending upon the problem, then you will use this formula, minus variable cost per unit, minus variable cost per unit into number of units sold on credit under present policy, minus number of units sold on credit under present policy. So that will give you fixed cost. Then note, unless otherwise specified, fixed cost will remain constant. Fixed cost will remain constant under all alternatives. Will remain constant under all alternatives. One more formula. Investment in receivable. For calculating opportunity cost, first you will find investment in receivable. Here we have first priority. We will give it to total cost. Okay. So first priority will be total cost. That is variable cost plus fixed cost into credit period divided by 360 days, or if question is silent, take 365 days or 12 months or 52 weeks. Okay. If the question has both fixed cost and variable cost. Second is, suppose fixed cost is not given, but variable cost is given. Then variable cost or cost of goods sold is given sometime into credit period. Divide by same 360 days
Yes, sir.
or 365 days or 12 months. And suppose variable cost is also not given, then we'll use sales figure. Sales into credit period divided by same 360 days, 365 days or 12 months. So this way, this is important for solving the questions. Okay. 5 write down. Average collection period 365 divided by debtors turnover ratio. In some problem, credit period may not be given. Debtors turnover ratio may be given, or 12 months divided by debtors turnover ratio. Okay. So these are some formulae that we will require in solving the questions on whether to grant credit or not. Now next concept is factoring. In this chapter, factoring. So factoring, it is outsourcing of receivable management. It is outsourcing of receivable management. All your receivable management work is outsourced to another party. So now they will ask you the question whether we should appoint factor or not. So this is a question of benefit and cost analysis. Is it right? Yes. So whether to appoint a factor or not for receivable management. So we'll have to find out what is benefit. Benefits would be reduction in administration cost, reduction in bad debts, interest saved, due to reduction in average collection period. These are the benefits, but there are costs involved. So what are the costs involved in case you appoint the factor? So you have to pay factoring commission. Okay. You have to pay for fees, interest charged by factor. Interest charged by factor. So point number C is net benefit, net annual benefit. A minus B, or net annual cost of factoring to the firm. Benefit is more than cost. you will accept the factor. One more formula write down. One more formula right below this. Point number 7. Point number 7 write down. Rate of effective cost of factoring. So this will complete your discussion. Rate of effective cost of factoring to the firm. When you are appointing a factor, you have to check how much will be your effective cost compared with some other options, and then you can compare factoring with banks and take a decision. Okay. So in this case, the formula would be net annual cost of factoring. Please write down those who are not writing. At one place you will have important discussion for exam. So one day before the exam you have to study so much. You have to study other subjects also. You have to practice a lot of questions. So read this, at least read this much. So net annual cost of factoring divided by amount available for advance. Amount available for advance. Now your question would be, what is amount available for advance? And you multiply by 100. So you'll get the answer in percentage. You are right. So this percentage helps us to understand how much is the cost of appointing a factor. He's charging us fees, commission, interest. Amount available for advance is equal to the annual credit sale. Factor will not give you full amount as advance. First he will deduct factor reserve. Some percentage he will not give it to you. If bill is of 100 rupees, he might give you only 90. Because there can be bad debt, dispute. So he will not give you 100 rupees against an invoice of 100 rupees. That amount or margin that he keeps is called factor reserve. And he will also deduct factoring commission. Factoring commission is deducted in advance. Okay. There is one alternative formula also. Write down alternatively effective cost, same formula, but the denominator will change, is net annual cost of factoring divided by advances to be paid. These are very important discussion which students miss out. So how do you compute advances to be paid? Advances to be paid will be equal to amount available for advance minus interest deducted by factor. Minus interest deducted by factor. So some factor will deduct interest also and pay the balance amount to you. So what ultimately comes to your pocket is this amount. So this is the amount which the company gets to utilize, and for that this is the cost that they are required to pay. Okay, we'll take one example on this later. Up to this you have noted. Can I erase it now?
Yes, sir.
Okay. Point number 8 write down. Point number 8. Interpretation of cash discount term. How do you interpret cash discount term? Understand. Example, 2 by 10 net 40. So it means if payment is made within 10 days, between 0 to 10th day, 2% cash discount will be given. 2% cash discount will be given. Otherwise, normal credit period is how many days?
40 days.
40 days. So you have to pay in 40 days. If you can't pay in 10 days, then you pay within 40 days. If you pay within 10 days, you will get 2% discount. Point number 9, write down. Cost of trade credit. That means if you do not take the discount, but you delay the payment, how much it is going to cost you? Is it right? So write down the formula. The cost of trade credit is discount divided by 100 minus discount. So if it is 2%, it will become 2 upon 98. 2 upon 98 into 365, that is number of days in a year, upon credit period minus interest free credit period. Into 100. This is nothing but the formula of simple interest only. Okay. So, for example, if suppose it is 2 by 10 net 40. For example, if credit terms are 2 by 10 net 40, the cost of trade credit will be, if you pay within 10 days, you will get 2% discount. So 2 rupees divided by 100 minus 2, that is 98. So on 98 rupees you are paying 2 rupees interest. The logic is that on 98 rupees, if you pay now, you pay 98. If you pay after 30 days, you pay 100 rupees. So 100 rupees includes 2 rupees interest. The interest is paid on 98 for how many days? 30 days. So in per annum term, 360 divided by 40 minus 10. 40 days is credit period, but first 10-day interest free credit period. You can pay today or you can pay on 10th day, it does not matter. So the first 10 days will be called in our example interest free credit period and multiply by 100. Haji?
4.83%.
So if you delay, as a customer, if you delay, this will cost you 24.83%. Yes, but suppose a bank loan is available at 12%. So you can take a bank loan and pay within 10 days. So you will benefit 24.83%. But to the bank you have to pay only 12%. Is it right? So this is called cost of trade credit. Any query on this? So these are the numerical questions possible here. Now we will solve question number 5. Please come to your book. Question number 5. Question number 5. Write down question number 5. In your book you will find it. Question number 5. Mosaic Limited has current sale of 15 lakh rupees per annum. Cost of sale is 75% of the sale and bad debts are 1% of the sale. Okay, so the cost of sale comprises of 80% variable cost and 20% fixed cost. So what will be fixed cost? My question is, since you are highly talented student, what is the fixed cost of this company? 2,25,000. 15 lakh rupees the sales and 75% is the cost of sale and 20% is out of this is your cost of sale, what I have written in bracket, and 20% of that is fixed cost. So how much is that? 2,25,000. Write down here step 1. Write in the notebook also. Fixed cost in simple terms is 2,25,000. Okay, and unless otherwise specified, fixed cost will remain constant. But variable cost will change. Is it right? Variable cost will change. So now next line I am reading. While the company's required rate of return is 12%, Mosaic Limited currently allows customer 30 days credit, but is considering to increase this to 60 days credit in order to increase the sales. It has been estimated that this change in policy will increase the sale by 15%, while bad debts will increase from 1% to 4%. It is not expected that the policy change will result in an increase in fixed cost, and the creditors and the stock will also be unchanged. Should Mosaic Limited introduce the proposed policy? Analyze. Assume 360 days in a year and see this question was given in study material and then they asked in the exam for 10 marks. Is it right?
Present policy versus proposed policy.
So we'll have to write down present and proposed policy, whichever gives me higher net benefit. Yes, total approach. And then we'll solve by the incremental approach also. So we'll have a revision of total approach and incremental approach. Understood? Are you with me?
Yes, sir.
Those who are not with me, yes, are against me. So write down step 2. Step 1, fixed cost you have written.
Yes, sir.
So now write down evaluation of the proposal. Evaluation of the proposal to increase credit period. Okay. So this is your present policy. This is proposed policy. And here I can write incremental also. So that will save your time as well as our time. So first you write down point number A, credit period. Anybody for credit period? In bracket, in days. First is 30 days. Is it 30 days here? 60. We are going to increase the credit period by 30 days. No problem. Point number B. Sales. Yes, students. Sales 15 lakh. The post policy will be 15 lakhs plus second paragraph of the question. It is estimated that change in policy will increase sales by 15%. So 15%. 17 lakh. So if you have to solve by total approach, then only two columns are required. Okay. These two columns for total approach. If the problem says solve by total approach. If the problem says solve by incremental approach, then one more column you will add. So my dear student, by what amount sales will increase here? Is it 2,25,000? 2,25,000. Point number B, write down cost. Under cost, first you write down variable cost. Variable cost. Come on, student. In the present policy, 9 lakh. How did you manage to reach 9 lakh?
Sir, 15 lakh.
15 lakhs into 75% into 80%. So how much?
9 lakh.
9 lakh. In second column, 17 lakh 25,000 into 75%. No, just wait. How much is the variable cost to sales ratio? 60%? Variable cost is 75% into 80%, 60%. So now you take 60% of this number. 10 lakh 35,000. So multiply, sorry, take the difference. Anybody for the difference? 1,35,000. That is incremental variable cost. Point number 2, write down fixed cost. Already calculated in the step number 1. How much was that fixed cost? Step 1, 2,25,000. Question says fixed cost will remain constant. So incremental is 0. So now I will take the total of these two. Total point number C, write down. This is point C. So total of point number C. Anybody?
11,25,000.
Very good. 11,25,000. 12,60,000.
1,35,000.
Incremental cost will be 1,35,000. Point number D, write down with bad debts in percentage. So what is your present bad debt? 1%. Proposed policy.
4%.
So point number E, write down. Here the increment is not required. Bad debt amount. Bad debts amount. You multiply sales into bad debt percentage. B into D. D. The first column 15,000.
15,000.
Second column 17,25,000 into 4%.
Sir, 59,000.
So by what amount bad debts will increase?
Sir, 54,000.
54,000. Point number F, write down expected profit. Expected profit will be point number B, sales, minus total cost and also minus bad debt. Point number E. B minus C minus E. Come on, students. Take 15 lakh minus 11 lakh 25,000 and minus 15,000. So anybody, what is answer? 3 lakh 60,000. Try the next column. 17 lakh 25,000 minus 12 lakh 60,000 minus 16. 3 lakh. Is it 3 lakh 96,000? So by what amount your profit will increase? Your expect. Now suppose your question says incremental approach, then under incremental approach this column you have to draw, okay, and this whatever you have written here will become your inner column, working notes, whatever you call it, or you can write like this also. So you can write like this also if the problem specifically mentions incremental approach. If the problem mentions total approach, then incremental column is not required. If it is total approach, incremental column is not required. Matter closed. Point number F. Investment in receivable. Any other presentation is welcome if your answer is same. So let us not waste time on that. So investment in receivable, wait a minute. First write down formula below that. What is the formula we'll write? Total cost into credit period and divide by 360. So you take total cost from point number C. This is I think 11 lakh 25,000 on calculator into 30 divided by 360. 93,750. Okay, students, try again. 12 lakh 60,000 into 60 divided by 360. 2 lakh 10,000. 2 lakh 10,000. So increase in investment in receivable. Incremental investment is how much? Please tell me the difference. Don't waste time. 2 lakh 10,000 minus 93,750. If you will not answer, right, 1 lakh 16,250 is the incremental investment in receivable. So next point. This was point number G. Point number H, write down. H, write down. Opportunity cost at the rate of. What is the opportunity cost of investment in receivable? In the problem, 12%. Third line of the question. Required rate of return is 12%. So please take 12% of 93,750. 11,250. Okay, then take 2 lakh 10,000. 25,200. Difference is 13,950. Point number I, write down net benefit. Net benefit will be your expected profit. Point number F minus H. F minus H. First column take on calculator 3,60,000 minus 11,250. 348,750. Second column take 3,96,000 minus 25,200. 3,70,000. And in last column Last column, take 36,000, which is your increase in profit minus increase in opportunity cost. I will also check 22050. So this problem I have solved by two approaches. First and second column total approach. Last column is under incremental approach. So if you use total approach, you will accept the proposed policy. If you only follow incremental approach, then also it is positive. So you will say that yes, we should follow proposed policy. Understood? Write down the conclusion. Advice. Advice, write down, the company should extend the credit period because it will increase net profit, net benefit. It will increase net benefits by rupees 22,050. It will increase net benefit by rupees 22,050. Then write down one note. Investment in receivable. Note, write down investment in receivable is based on total cost. Is based on total cost. Investment in receivables is based on total cost. This way, if you write the answer in detail, then you get full 10 marks. Okay. So if this question is repeated again, you can follow this procedure. Question number 5 is over. Now we'll come to question number 12. Question number 12. A factoring firm has offered a company to buy its accounts receivable. So this is a problem on factor. So one question I have taken on evaluation of the proposal to relax the credit period. One practice will do on factoring. Okay, a factoring firm has offered a company to buy its accounts receivable. The relevant information is given below. Question is from December 21 exam for 5 marks. This is also an exam question. The relevant information is given below. The current average collection period for the company's debt is 80 days. When the company is monitoring the receivable itself, they are taking 80 days to collect. And what is your bad debt default? 0.5%, 1/2. So this is 1/2, 0.5%, 0.5% bad debt. The factor agreed to pay over the money due to the company after 60 days. So factor says, don't worry, we will pay you within 60 days. So your credit period or collection period has reduced by 20 days. So there is a reduction in opportunity cost of 20 days credit sale. And it will suffer all the losses of bad debt also. Means once the factor takes the responsibility to recover, bad debt loss will be borne by whom? Factor. So therefore we will have saving in bad debt also. So one saving is bad debt will be reduced. Interest cost of funds blocked in receivable will reduce. So these are my benefits. And what are the costs here? Factor will charge commission. So your cost will include commission payable to factor. Actual number I will write later. Company spends 1 lakh on administration of debtor. These are avoidable costs. One more benefit. Your administration cost will also reduce by 1 lakh. Annual credit sales are 90 lakh. The total variable cost is,
80% of 90 lakhs.
so this will be variable cost 80% will be required for calculating the opportunity cost of fund. Is it right? Then the company's cost of borrowing is 15% per annum. So this is your opportunity cost. Assume 365 days in a year. Should the company enter into agreement with the factoring firm? So just you have to do this 3 calculation here, 1 calculation here, you will get the net benefit. In fact, bad debt is very easy, 0.5% of 90 lakh you have to take. Admin cost is given. Interest cost you have to compute for 20 days. And commission you have to take 2% of 90 lakh. What more do you want? Should I write on your behalf? That is the only pending thing now. Okay. So write down evaluation of the proposal to appoint the factoring firm. Evaluation of the proposal to appoint the factoring firm or the factor. Okay, right hand side rupees. It's just a benefit versus cost analysis. So point number A, benefit. So what are the benefits of appointing factor? First is, first write down administration cost saved. Administration cost saved. Little fast. Yes. Any other format is welcome, but do yourself. Okay. If your answer is same and institute can understand, then I have no problem. Then write down bad debt. 0.5% of credit sale.
Sir, 1.30.
Credit sale is 90 lakh. Is it 45,000? And one more benefit you write down. Reduction in interest cost. Reduction in interest cost. How do you compute that? How much is your credit sale? 90 lakh. Your collection period will reduce from 80 days to 60 days. 20 days saving. The problem says take 365 days in a year. This you multiply by 80% because variable cost is 80%, or you can first multiply 80% of 90 lakh here, no problem. And the opportunity cost is at the rate of 15%. This is your opportunity cost or rate of return, and this is the variable cost. Final answer 59178. Point number, so total A, write down total A. This is your total benefit if you appoint the factoring firm, 2,04,178. Point number B, cost. So under cost you have factoring commission, only one cost. Factor will charge you 2% of 90 lakh. Is it 1,80,000? So point number C, net benefit. No, he's not charging you, he's not giving you advance, he's only providing you collection service. And he says, if I do the collection, I will reduce your credit period by 20 days and I will reduce your bad debt and I will reduce your administration cost. So give me the charge of collection
That is 1,80,000.
and I am charging 1,80,000, but then company is going to benefit so much.
24,178.
24, very simple, logical.
Means in that previous problem, he used to
In an earlier problem, he had given me advance, so we had to also consider interest here. But he is not giving us advance. If the factor provides us advance, then we have to also compute the interest cost. Okay, write down conclusion. Conclusion, write down, since net annual benefit is rupees 24,178. Since net annual benefit is 24,178, the firm should appoint the factoring firm. The firm should appoint the factoring firm. The firm should appoint the factoring firm.
Yes, sir.
Note, opportunity cost on investment in receivables. Opportunity cost of investment in receivables is based on what? Variable cost. Based on variable cost. Is it right?
Yes, sir.
So now we'll go to one more question. Kindly come to question number 8. So the students will come to one more question. Again a different variety. If you solve many varieties of question, then only you can think of getting through this exam. Okay. Only by dancing in the classroom, mugging up the formula won't help you. Understood? Is the message clear? This is financial management, not a joke. So let us take it seriously and solve. And only you can get through in the exam by solving so many different varieties. So let us go to question number 8. A company is considering its working capital investment and financial policies for the next year. Estimated fixed asset and current liabilities for the next year are, estimated fixed asset is given and current liabilities are 2.60 crore and 2.34 crore respectively. Estimated sales and profit before interest and tax, EBIT means earning before interest and tax, depend on the current asset investment, particularly inventories and book debt. The finance controller of the company is examining the following alternative working capital policies. It's more a chapter of working capital. Okay. Next is working capital policy. There are 3 policy options: conservative, moderate, aggressive. In conservative policy, you will keep more current asset. In moderate, between conservative and aggressive. In aggressive policy, less current asset. Why to unnecessarily invest in current asset? And these are your estimated sales level. And this is your estimated EBIT. Okay. After evaluating the working capital policy, this is going to be my working capital policies. The finance controller has advised the adoption of the moderate working capital. Underline, tick mark. So finance controller says, okay, let us follow the middle part. Moderate policy. The company is now examining the use of long-term and short-term borrowing for financing the asset. So now what they have decided to follow moderate policy, but then they have to raise funds also. So what is the funding? They are going to use both type of funds, long-term Short term. The company will use 2.5 crore of equity funds. Corporate tax is 35%. Companies considering the following debt alternative. So how to finance your working capital? So financing policy, conservative debt, short-term debt 0.54, long-term 1.12. Moderate policy 1.66. Aggressive policy, short-term debt will be more, long-term debt will be less. Interest rate on short-term debt is 12%. Interest rate on long-term debt is 16%. So now what is the question? Question is, you are who? You are required to calculate the following: working capital investment for each policy. So working capital investment for each policy, that is, what is the net working capital position? Net working capital position means current asset minus current liability. For each policy means moderate, aggressive, conservative, and then rate of return for each policy, and then current ratio for each policy. Current ratio means current asset upon current liability. Then you have to calculate for financing of each policy what will be net working capital position. That means after considering short-term debt also, what will be your net working capital position. Now you will also consider short-term debt in the current liability. Then rate of return on shareholders equity. Rate of return on shareholders equity means you have to find out earning after tax divided by shareholders fund. And for calculating earning after tax, you have to deduct this interest also. Deduct the interest also. Deduct tax also. Then you will get earning after tax and again compute. Again compute. Come on. Current ratio. Current ratio. So you will ask me, sir, are we not computing two times? No. This is based on this original table. Conservative, aggressive, moderate, without considering the financing. And then we are going to consider financing, where I am going to take three different financing strategy: conservative financing strategy, moderate financing strategy, and aggressive financing strategy. Okay. So question is little lengthy because you have to compute three times, three ratios under two situations. Okay. Highly important question. Source of the question is not your study material. Everything is not in the study material. November 18 RTP, May 19 RTP. So what is the next station? Exam. You're right, sometimes. So first we will write down, first heading write down, statement showing, step 1. Only with pre-practice you will be able to understand what is the question. Otherwise many students will not understand only what I am supposed to do. Statement showing working capital for each policy. Working capital, that is your first question. Statement showing working capital for each policy. Here each policy means the first table where the company wants to have conservative policy for working capital with more investment in current assets. Moderate policy means somewhere between conservative and aggressive. An aggressive policy means you want to keep less investment in working capital. Okay. So are you ready? No, you have to draw three columns on the right side. हाँ जी.
Usually on long-term debt, rate of interest will be
serial number, particulars. And there are three working capital policies. Conservative. If you write along with me, you will get more benefit. If you only stare at the screen and think you are genius, institute will show you your true color. Okay? Better to write in the notebook and practice.
Yes, sir.
So, assuming you are ready. So, first question is to find out net working capital position. Right now, we will not consider how the working capital will be financed. Okay. That is for my next answer. The effect of financing policy on different ratios. First, write down point number A, current assets. Refer the first table and tell me current asset in conservative policy. 4.50. At the top, write down rupees in crore. Right hand side, top right hand side corner, rupees in crore. Are you with me? What is your working current asset in moderate policy? First table. Yes, these are called working capital policies. Conservative management will keep more current assets. Aggressive will keep less current assets. Point number B, write down fixed assets. Fixed asset is given in the paragraph number 1, 2.60. Is it there, 2.60? So this will give me total asset, point number C. Because we have to compute return also. So total asset would be A plus B. 7.1, 6.5, 5.20. Point number D, write down less current liabilities. Less current liabilities, which is printed in the first paragraph in the second line. Question in front of you. Without question, you won't understand. 2.34. Right now, we will not consider financing. Okay. That long-term debt, short-term debt in the next answer. So point number E would be net worth. Assets minus current liabilities net worth. C minus D. 4 point. Then 4.16. 2.86. Okay. Point number F, write down sales. Sales figure is given in the first table. 12.30, 11.50, 10. Point number G, write down EBIT. That is also given. Check and tell me. 1.23, 1.15 and 1. So we have written all basic numbers. Okay. Now we'll compute the ratios. First they are asking you net working capital. Net working capital position. First question. Question in front of you. So A is current asset and D is current liability. A is net working capital means current asset minus current liabilities. Kindly reply. 2.16. Okay, very good. Very good. 1.56. Then 0.26. Then second write down. What is the second ratio? Rate of return. Rate of return. So rate of return will be your EBIT, which is point number G, divided by net worth, point number E. Rate of return on net worth write down. 25.84%. Then 27.64%. Then 1 more write down. Point number 3. Rate of return on total asset. Rate of return on total assets, which will be G upon C on total asset. They have mentioned compute rate of return. Not very clear, is it on net worth or is it on total asset? 17.32%. 17.69%. Very good. 19.23.
Yes.
One last point write down, which is current ratio. Current ratio A upon D. A upon D write down. Current asset upon current liability. 1.92. Next column. 1.67. 1. Now see, the purpose of doing this exercise is to tell you, in conservative policy liquidity is good, but profitability is low. Whereas in aggressive policy, the profitability is high, but the liquidity is low. And in moderate approach, it is between conservative and aggressive. So company has decided to follow moderate approach. Now once they have decided to follow moderate approach, the next is how to do the financing of current assets and current liabilities. So for that, again, there are three approaches with respect to financing also. With respect to financing, now there are three approaches: conservative, moderate and aggressive. Now this conservative, moderate and aggressive is with respect to financing of working capital. Conservative approach, less short term, more long term. Okay. An aggressive approach, more short term, less long term, because short term is available at a lower rate. Long term is available at a higher rate, so I will go with short term more. Now the student is asking, why long term rate is more than short term rate? This is market. Depends on economic situation. Short term rates are lower than long term rates. So usually that is true. Okay. Sometimes it can be reverse also. You are a student right now, so your question is genuine, but whatever they will give you, follow. So first, based on this analysis, company decided to follow moderate approach. So these are the assets and liabilities this company will have. Understood? Moderate. Under moderate, now we'll have three columns again with respect to financing. With respect to financing. So step number 2. Step number 2, we will write statement showing, which is your question number Roman 2, statement showing effect of first moderate policy with respect to how much current asset we need to carry. Once we have decided that, then how it will be financed. Under that also we have three choices. Short term is more, long term is less, short term is less, long term is more, and moderate approach. Okay. So statement showing effect of alternative financing policy. So here the financing policies are of three types. You write down financing policy. Under that you write conservative, moderate, aggressive. So write little fast. I will highly appreciate if you write fast. Concentrate on the question. Keep the calculator ready. Draw one page. Take a scale, draw one page. It's a lengthy working note because we have to compute net working capital position, rate of return on shareholders equity and current ratio. But in case if I am also taking financing, I have to consider interest rate. I have to consider taxation also. Since I have to compute rate of return on shareholders equity, I need to reach up to PAT. I need to reach up to PAT. Point number A. Current assets. So tell me how much current asset will I write? Company have decided to follow moderate working capital policy. So in the moderate working capital,
3.90.
in the moderate working capital, it is 3.90. So that will be 3.90 in all the columns. Right hand side, top right hand side corner, rupees in crores. Presentation is equally important. Then we'll get full marks. Point number B, fixed asset, which is already fixed, 2.60, 2.60, 2.60. Point number C, total assets, A plus B. With the calculator ready. So that comes to 6.5, 6.5, 6.5. Point number D, current liabilities. So what is the current liability other than short-term loan? Other than short-term loan. Anybody who wants to volunteer? 2.34, 2.34, 2.34. Now the answer will start changing. Point number E, short-term loan. Short-term loan, refer your question under different financing policy. Short-term loan is 0.54. Can you see 0.54? Then 1 and 1.50. Can you see that in the question? First check, then write. I'll show you. Some of you are looking lost. 0.54, 1 and 1.5. This is what I am talking. So can I calculate current liability again? Point F, current liabilities, including short-term loan, please add D plus E. Current liabilities including short-term loan, 2.88. Very good. 3.34, 3.84. Stop. Any query till now? No query. Point number G, write down long-term debt. Long-term debt. Long-term debt is how much? According to this question, conservative policy 1.12, 0.66, 0.16. Point I, write down total liabilities, because I have to find equity also. So total of the liabilities will be 444. Is it 4? Point number J, write down equity shareholders fund. Why do I need this? I have to compute return on equity shareholder fund. So on the screen, this is my total of the assets. This is my total of the liabilities. Okay. Total liabilities write down F plus G here. So equity will be P minus I. So are you getting 2.5? Any other presentation is welcome if your answer is same. This I will require in the calculation of return on equity. Is it right? Point number K, write down sales. So now I am going to find out PAT. I am going to find out PAT. Sales is given how much? In moderate policy. And we will keep it constant because this is under moderate working capital policy. These are the three financing policies. Is right? 11.5. So what is EBIT in moderate policy? 1.15, 1.15, 1.15. For your understanding, you can write in bracket for moderate policy, because the company has decided to choose moderate working capital policy, and now they are evaluating what should be financing policy. Okay. So from EBIT you need to deduct two types of interest. So how many points we have written? How many points we have written? L. Now write down M, interest. Under interest write down A, on short term debt at the rate 12%. In the first column you will take 12% of short term debt. 12% of short term debt is how much in the first column? 12% of 0.54. Come on. In two digits only. Yes, only in two digits. Please do not waste more time. 0.06 is right. Go to next one. 12% of 1. Very good. 0.12. Next one. 0.18. Presentation is equally important. Point number B, on long-term debt at the rate 16% on long-term debt. At 16% on long-term debt. 16% into 1.12. 16% into 1.12. 0.18. Only in two digits I want. 0.18. Next. 0.12. 0.12. 0.02. 0.02. Check the rounding off properly. 0.3. So can I make it 0.3? Now just total of this interest This I will call total M, total interest. 0.24, 0.24, 0.21. Okay. And write down EBT. EBIT minus interest. L minus M. 0.91. Come on, next one. 0.91. Come on, next. Is it second one is 0.91 or 92? Okay, 91. Last column. 0.94. Okay. Point number O, write down. PAT. PAT will be EBT into 1 minus, what is the tax rate? 35%. So you multiply by 65% and answer in 2 digits. So PAT will be 0.59, again 0.59, 0.61. So we have computed all your main workings. Now ready to reply to your ratios. Which are the ratios they have asked? First ratio is net working capital position. Net working capital position. So I will have to take current asset, which is point A, minus total current liability including short term loan. Okay, so you'll have to take A minus F. Write down A minus F. Student will reply A minus F. Current asset minus total current liability including short term loan. A minus F. 1.02. Okay. 1.02. 0.56. Very good. Come on, next. 0.06. What is your second question? Rate of return on shareholders' equity. Rate of return on. Please practice such question. Okay. Otherwise, in the exam, you will not be able to visualize the format. Point number O, that is, okay, write PAT. Otherwise, you will think it is 0. PAT divided by shareholders equity into 100. O upon J into 100. 23.6%. 23.6% is right. Yes, come on, everybody. 3.6%. Second column is how much? 24.4. Is this 24 point? That is 23.6. 23.6 only. Okay. 23.6. Maybe some rounding of difference is there, huh? 24.4. Okay. Okay. And one more, write down current ratio. A upon F. So try A upon F. 1.354. 1.354. Okay, next. Sir, 1.17. 1.17. 1.015. Very good. So again the observation is In aggressive policy, the return is high, but the ratios are very poor. Liquidity is poor. In conservative, return on equity is lower, but the current ratio is more than 1.35. So, so one has to compare under different policies and then choose what is more suitable for you. Okay. So in this example, the company may follow moderate working capital policy, but conservative financing policy. But conservative so that at least their current ratio will remain more than 1.354. So it should have a good working capital position. Okay. Or they can even follow moderate financing policy. In that case, the current ratio is very close to 1. So that again depends on your risk taking ability. But is it right? So this answer is over. We are not required to make any comment. So with this wonderful answer is over. I hope you liked this chapter. Liked? Enjoy.